strange for the fast and the slow to be in the same spot.
All right, guys. Let's see. We should be live here. Let me just double check. We should be live here. Let me just double check. We should be live here. Let me just double check.
Oh.
All right. Let's. Can everybody hear me? Okay. Let's do a little test check here. Swing and smash it. Now remember, guys, this is a private video, so it's just us, very intimate. All right, I think it's live. Can you guys post in the chat that you guys can see us?
It's good. I can see it.
All good on audio. Perfect. Video good. All right, excellent. Wait. Can you see it from the link that we posted, or is this live on my YouTube channel right now?
Oh, I went from the link. Let me check your channel.
It should be private. You were looking live. Link. Okay, perfect.
Your channel is good.
Excellent. Cool. Buy link. Yeah. It's actually looking not too bad. If it can hold its support the level that it's at. All right. Okay. So welcome to the stream, guys. We're gonna go through my charts, and then we're gonna go through one of my analyst charts, Mr. Chinggis. And Chinggis, do you want to introduce yourself? They may not be familiar with your work. You've been trading Forex for many years, in crypto and some other stuff. You have a different approach to the market. Do you want to kind of give them a brief introduction to who you are?
Yeah, sure. You'll know me on the Discord as CX. That's me. Same logo I use on Twitter and YouTube and everywhere else. So I try to stay somewhat quiet on the Discord, at least in the last few weeks, just sort of getting my foot for who's there and how everybody reacts. But I'm always around. I'm very much like Jacob. I'm up 21, 22 hours out of the day doing something, working. And yeah, I trade options. I trade Forex, trade traditional markets. Haven't quite played around with futures as much as I want to, and trade crypto. So my passion was found in charting. I enjoy looking at the charts and learning about them, understanding them, how things move, what things react, supply, demand, support, resistance, dialed into heavy use of hundreds and hundreds and hundreds of indicators, and dialed it all the way back to mostly price action.
Dude, I just did a live stream with Tone Vase, and you know, I said something about a meme where it was like, actually I can put us on video for a minute. Basically it was a meme where you start out, you learn support and resistance, trend channels, and then you get to indicators, you know, all the different indicators, and then you go into like astral geometry, sacred trading,
for sure, yeah.
And then after like all that, you're like, fucking support and resistance works the best, man. I'm just gonna stick with,
I went through Metatron's cube and
Metatron's cube, yeah. That's why I meditate.
Gann theory, and yeah, it's I haven't learned as much time theory as I would like. So when
Fibonacci time theory, I've studied it quite a bit. There's one guy who uses Pi, who ran one of the largest hedge funds in the world. He has a specific newsletter now, but he uses Pi for time theory, and I haven't exactly figured it out how he uses it. I've tried it for a while, but yeah. So let's start it off. I'm gonna go through my charts, and then I'll have Chinggis go through his charts. And so first we'll start off with Bitcoin. And what I always like to do is whenever I look at a Bitcoin chart, I have up 4 indicators: RSI, MACD, OBV, and the stochastic indicator. And I'll go through each one of these. And kind of what I look for. RSI, I like to look and see. We'll start out with the monthly first and just kind of see if there's anything to see on the monthly. The MACD looks like it's kind of just getting started. We're on Bitstamp. Bitstamp goes back till like December, 2012, 2013. But the MACD from the 2017 bull run really looks like we're kind of just getting started. Now, there were clearly and obviously pullbacks within this. There was 40%, 40%. But we've got 3 monthly bars, and it looks like we're still heading up on the stochastic, which is a momentum indicator. This kind of gives you the strength of the trend. The OBV on the monthly chart had a little bit of a retest of this point right here back in basically the peak. So the OBV kind of bottomed out January 2019, and it's been upwards ever since. And it kind of looks like we're forming a little cup and handle on the monthly. So our important monthly levels to take a look at are exactly where we bounced and where we bought in as Signal Profits members. Is at 94 to 9600 level, which we closed here, opened here. And that was a very nice buying opportunity. It looks like we had a little bit of resistance back here in February and March, but it didn't really hold true to those levels too well, a little bit, but more so the recency of this daily candle closing and then opening, that acted as a key support there. Let's go down to the weekly and let's take a look here. So the weekly, again, that 94, 9500 zone, back to here, which was also, I've been watching these peaks. These peaks have been acting as very key levels throughout pretty much this whole run. You can see like back here, this level and this level, very similar price action. And then same thing we had this wick down here, which was basically kind of retested that 6K level. So we've had these 3 price actions on the weekly levels, which were very important. The MACD is still trending upwards, bit flat on the last 5 candles. But if you look back at 2017, we did this a few times without ever dipping down into bearish territory. You can see we kind of ramped up, a little touch of the red, ramped up, little touch, but we never had an actual MACD cross on the weekly during all of 2017, and we're pretty far apart on the fast and slow moving aspects of the MACD right now, and so those usually like to come back to center. You can also use something like an ADX indicator to see kind of when they'll kind of come back together. OBV on the weekly, let's take a look here. It is trending upwards. So that's clear. There was a bit of a consolidation pattern on the OBV. This stands for on balance volume. This is usually kind of an indicator for smart money to see what smart money's doing. And also, if you guys want me to explain something more, or if you want me to stop or go into something a little bit more in depth, just kind of let me know in chat. There's about 30 of you guys in here right now. A lot of people will probably be watching the recording. And so if you guys have any questions, this is specifically set up for you guys to ask questions and kind of get more in-depth answers to, more of your questions in chat. So the stochastic, we did get a crossover to the downside, but we're just kind of coming back up. So this looks like it's regaining momentum. So we got this crossover around May 27th on my birthday. On the weekly, and it looks like it's actually coming back to the upside. So this looks like it's going to want to push up and retest, which stochastics is similar to the RSI in that if it doesn't drop below the 40 mark, that's usually an indication that we are still in that bull trend. So it's still showing strong on higher time frames on a lot of different indicators, OBV, stochastic. RSI is still in a bullish territory. As you can see, we're just basically hanging out around that 70 level. So I just use these. Obviously, these are lagging indicators, but they are very helpful in just kind of navigating Bitcoin's kind of just the high time frame to see if there's anything showing bearishness. So let's take a look at our moving averages. So to date, we had that crossover of the 20 MA around March 25th when we were at 4,000. We had that big candle right afterwards. That's usually a really good indication on bull trends as far as like the weekly is concerned. You can see the 20 MA held us back basically all of 2018 once we really broke and we couldn't close above it, all the way back to 11,000. Basically that one big bearish candle in January kind of ruined that overall bullish structure from all of 2017, and we were downtrending. But we did break it here at 4,000, and we have not retested it quite yet. And that is one thing that I am watching for to really go heavy. And this is a point where you could, you know, potentially add money back in the market if we do get a retest on this 20 MA, because that 20 MA was tested multiple times, and this 20 MA weekly correlates to the 100 MA on the daily. So you can use either one, but you can see the pullback here, pullback here, pullback here, but we have not had one of those yet. And so I would expect at some point we should get a pullback. But again, this thing can continue to run and the 20 MA will get dragged higher and higher. So we might not get a retest until, you know, 12.5, 12,000, depending on if this thing can break to the upside. The weekly RSI, we never actually hit 2017 or even the 2013 levels of overbought. This was a weekly overbought where it went really, really massive. We haven't even hit above 85 yet on a bullish. I mean, these were good sell zones right here. This is a good sell zone for that, you know, that pullback that did 40%, 40%. But we have not even hit the 87 to 90 zone quite yet. This acted as resistance only one other time that I see. Actually, this level right here was hit, and it kind of retraced all the way back down to 52. So we haven't quite seen either one. If we do see price push up one more time and RSI stays flat or below the 70, then I would be looking for a definite longer term pullback, because that would be a swing high failure on the RSI. Okay, so that is the high time frame stuff, weekly, monthly. Those are some of the levels that we're looking at. We're currently sitting at a very, very key resistance level right now, 11.5, 11.6, which was a resistance back here, you know, 2 weeks in a row, as well as back here in February of March of 2018. So this is a very, very key level as far as weekly is concerned. And you can see all the wicks as it struggles to get above that. So we definitely want to see a bullish push and close above that in the next, you know, 20 minutes. That'd be great if we could close 11.6, 11.7, because that would be the first weekly that really closes above that zone since really January 22nd, 2018. Okay, so that's Bitcoin weekly, 3-day. And we can also, if you guys want, we can also use the TD sequential. It's also very helpful. Where's that at? Right here. This one by Glaz I really like. I just got Tone Vases TD sequential, so I'll start kind of playing around with that. We did get a 9 candle on the 3-day green, which has been really, really good throughout 2018. As far as, I'm going to close down these MAs so we can see just this TD sequential. But if you look, this 3-day TD sequential showed up at 3,600, and then we went bullish from there. It was here, it was here. So that 3-day TD9 is usually really good at starting a kind of a new long-term uptrend. So that's where we got in at 9,500. We sold out around 10,800 once we came up against some, you know, fresh daily resistance. But we did get 7 straight days of just kind of push through that. And we've hit high time frame resistance. We did hit an 8 and a 9 on the TD. We hit a 13 over here and saw a very, very big pullback. So this TD has been pretty accurate on the daily as well. We did hit that 9. So we might be looking for a little bit of a pullback, maybe even lower on lower time frames, but on small time frames, we are possibly looking at a move. Actually, I just spotted a descending broad wedge here, which is usually a bullish pattern if we can break to the upside here. So a little bit of a descending broad wedge on the RSI 4-hour. And then I am going to pull up my moving averages again so we can look at all those while we're looking here. So this is usually not a good sign, but the 20 is still above the 50. What we don't want to see is we don't want to see the 20 cross down the 50, because that would be a definite bearish sign that we're probably going to see further downside momentum. We did push up against the 50 MA as well as the 20 MA, and we've been rejected once and twice. So if you're going to take a short, this is a decent place to hedge a short, even though we just had that nice bullish candle closing. But we may see some a little bit of craziness before the daily candle close. Here we saw a nice reaction off of the 500 MA down here where it bounced twice, which was also on the 30-minute up here, the 200 MA. So right now we've got the 20 MA, which is acting as resistance. This is kind of a no trade zone territory for me. It's just kind of in the middle of of two places. You could take a short here. Usually what I like to see is I like to see kind of a retest of, and we've got a little bit of a retest of kind of the lows here, and acting as resistance. So a decent place to short, but you know, my short-term target would probably be, 2% down to here. What I like to enter in on is I like to enter in on these candles like this, that looks like a seller's capitulate, or a seller capitulation wick, where buyers step in after, maybe somebody went along here and they were on, 10x, 25x. Well, they got liquidated down here, and then buyer just came in and bought it right up. So somebody was looking to fill some liquidity right there. But right now we're kind of in a possible bear flag scenario, getting rejected by the 20 MA. That's why we haven't sent any positional updates yet so far. We're waiting to kind of get a little bit more data information, waiting for this weekly close. Now I'm going to hand it over to Chingiz and get his thoughts on Bitcoin, and then we'll start doing some charts. Is this helpful, you guys? Is this kind of, do you want me to explain any more in depth? Go ahead and feel free to post anything in chat. Is chat going? I can't tell.
I got chat on my screen. I haven't seen anything since Joe Bob and Buy Link.
Okay, cool. Joe Bob, Buy Link. Okay, cool.
Joe Bob, Buy Link.
Excellent. Okay. And what we do want to start doing is, this is specifically for, all tiers. But we do want to start doing daily closings for, the TD sequential. If you just type TD, look at Gaz's. It's a free one. It's got about 15,000 likes. Would be great to see high time frame Bitcoin projections. Okay, we can do that. I'm going to let Chingiz take over the screen here, and we're just going to go, they're perfect. Okay. It's all yours, man.
All right. Yeah. So everything that Jacob just said was right on point. I mean, as far as Bitcoin is concerned, we're looking at a couple major things right here, and the swing fail on the daily is kind of the key point of interest for me. So this major level that came in up top, this potential area that we had at 13.2, we weren't able to solidify a close up above. So that created the downtrend that we had that lasted a few days. From there, the second swing fail on the local trend brought us similar to a double bottom push up. So if you notice,
do you want to explain what a swing failure is? Just so this is a price action pattern that shows up, the swing failure. But just so people that are starting out technical analysis, they're subscribed to a signal group, so maybe their TA isn't the sharpest. So I kind of want to give them some basics on what a swing failure might be.
So I don't know by classical technical definition. How I use swing fail is exactly how it sounds. It's a failure in trend. So we've essentially established an uptrend, and we created a top point and then a pullback. So this move right here shows you that you have a pullback. Continuation to the upside is what would give you your trend. So you would have a low, you would have a high, you'd have a higher low, and what would be your next higher high would solidify the trend. Because you failed to create a higher high, that is now a swing fail. So you have failed to create the higher high. Once you do that, there's situations where you can look at for getting back into that mode. First thing you do is you draw the swing fail. This becomes resistance, even though it's technically not a trend line because it hasn't received its third confirmation. It's a line or a point of interest that we look for resistance as we get back to it, which is exactly what it did. We came right back to it, and what had happened, we got resistance. 1, 2, 3, 4, 5, 6 days of full resistance trying to get over this one line. So it's not just an arbitrary level that just appears here out of nowhere. It does have confluence with multiple levels prior. Now, this is what I would consider like a false break. Basically, everything that you pushed up and you gave right back within a day or two. So continue this trend right through here and just sort of picture this level as not that important or not that valid of trading. There was a lot of trading that happened here, but because you gave it all right back, you just continue your trend up. So what I look at is the low, the higher low, and then the swing fail, right? The missed opportunity to create a higher high. From there, we drop down. Now, this level that we drop down to does make sense. If we were to throw a fib on here, we get an idea of what that local pullback was, not on the grander trend, but just on the local side. We could see if we just keep it there right about the 706. So that 706 in crypto does seem to work out more often than not, which is strange, but we use it anyway. As far as EMAs are concerned, right, that's the 70 EMA. That's also another classic crypto one that seems to hold up fairly well. And that's 70 EMA on the daily chart. So when we pushed down, we found support. Pushed back up, right, failed again right here. Now this red one here is the 20. That's the 20 MA, right? So that's this guy right here, 20 MA. So from there, that's another one. So historically with Bitcoin and really all markets, 20 MA is pretty significant, at least down local daily trends, 4-hour charts as well. They do act as good dynamic support and resistance. These double lines over here, that's a 7 on the white EMA, and the red is a 9 EMA. Consider them both just one EMA. I'm in the process of doing some back testing. So when we push back out, we found resistance at the 20, drop back down. Now, this is what created, now double bottoms, like technically speaking, a double bottom has to be within 2%, which we did do here on the daily. But this will give you at least an indication that this level, underneath that level, that wick, right, this is an area of interest. We know that there's plenty of people that are trying to buy this zone, right? So when we start talking about supply and demand zones like that right there, under that 94, right at that mark where you guys bought, right, this is the area you want to buy, right? That is going to be support. You can see how many times you tried to close just under there and you weren't able to do it. So this is a key area that we may have to come back to and retest. If we do, you have to eat up all of that supply, which could take a little while before breaking through it. So that's something to keep in mind. What we did do was we formed a W. Classic W patterns in price action will typically get yourself back to candle height on the top left side of the W. It's not the prettiest W, I'll give you that, but the double bottom does create the push to the top, which is what we got. We did not quite hit candle body height on left side, and that's because of the rejection right here from the swing fail. So what we look for is swing fail. First, you got to creep up over this line, and then what happens, you have an area of not necessarily the best trading, right? It's a cautionary period where a lot of traders will watch and they'll sort of decide, hey, you know, what's happening here? We haven't solidified anything just yet, and because of that, it becomes a risky area to trade. So that being said, you get this zone in here and a cautionary period. So typically you want to break the swing fail, close above it, come back, retest it, and then push above. Your next area of resistance ends up being the top side of your original swing fail. That's your trend. You're out of trend, right, until you create a higher high. And then when you push back on the chart, you can see very clearly, okay, now on the longer scale, you have a low, you have a high, you have a higher low. This would be your higher high. So you can get into micro trends and you can get into local trends and macro trends. You can get into any trend you want. The idea with price action trading is to really just look at what you're handed here and say, all right, well, what do I have? And then zoom in as it makes sense. So our low is clear down here, right? We haven't crossed lower than that, right? So if you look at just...
Somebody asked what the price of the green line was. The green box, I'm guessing, Matt?
Are you talking about just the high, this green line here on the swing fail would be your local high. So it's 11,788, and that's on the Coinbase chart. It'll be a little bit different on Stamp and Finex and Trex and Binance. They'll all trade a little bit differently, but for the most part, I don't think we've crossed 14 on any chart.
Yeah, no, the support line. the green support line would be.
Oh, down. Okay, down here. Yeah, the low on that is 90.71. So 90.71, and then our second one, which created our double bottom, was 91.08.
Yeah, we did
So
it. We did get a classic W with the candle closings, just the wicks. And why those wicks exist? Usually, what happens is large position size traders, and I'm talking like mostly institutions. They need to create liquidity in order for them to go long, they have to have sellers. So usually they create some sort of narrative of FUD or whatever. And they all have some sort of a media machine that they can kind of spin up, whether it be Cointelegraph or whatever. They've all got their ways to do it. But what they have to do is they have to create sellers in order to create liquidity for buyers. Because what happens is when someone capitulates or sells and then they see it reverse immediately, then what happens is they fuel the incoming rally. And they kind of take that and they reverse it to the other side. And so, if they want to get short, if they want to short it, they have to make the market feel euphoric so that they create a bunch of buyers so they can enter into short positions. Same thing that they did at 20K. You saw all the news stories. So that's one reason you see those large wicks like that, is that's them filling positions for the direction that they want to go. And that's not always the case, but that's just kind of some insight as to how smart money thinks.
Yeah. So to jump on that a little bit more, I mean, think about yourself as a maker, right? Always try to put yourself in that position. Think about if you were trading, let's say, not Maddox, a bad example. Let's say you were trading something very small trading volume, like one. One's got very low volume right now, right? So if you're trading one, let's say you have $20,000, you're trying to move the market in your direction. It's very hard to get that filled on the other side. Every buyer needs a seller and every seller needs a buyer. So if it's just not there, you need to create the momentum there. So it's certainly not unheard of to take a portion of your stack and create the momentum. You buy it yourself higher than you would like in order to get that moving. And as volume indicators and bots that are designed to look at increases in volume in a 1 to 3% range, they'll start to get triggered. And as they get triggered, they'll start to buy. So you could create a market with enough capital. That being said, Bitcoin's a little bit different because it is so large. But the difference with Bitcoin is, unlike something like Kellogg's or GE or Ford, that are traded on essentially one central exchange, you have over 350 exchanges that are all trading Bitcoin at the same time. Some of those are using index volume for spot price, and some of them aren't. And this is why you'll see a range of arbitrage opportunities. At least you did years ago. It's a little tighter now. But that's the idea is you have an independent set of buyers and sellers on both sides, on every exchange. And you need to be able to provide your other half. If you're buying, you need to have sellers. So you need to have that liquidity in order to get those sellers in position so that you can buy it. And same thing when you're selling. When you're trying to get out of a trade, you'll notice on those smaller cap ones, if you trade them, you'll notice all the time you got a sell order and somebody front runs you. And then somebody front runs that guy. And then somebody front runs the next guy. And next thing you know, you're down 2, 3, 4, 5%. You can't get out of the trade. It's the same idea. You're creating that market. So if you can think like them, you could try to trade like them and put yourself in those positions. What do they need to do in order to bring the price X? And if it's up, then they need to create a situation in order where it's going to go up, so that maybe they're looking to get their sell orders after buying at 35. Maybe they want to start selling at 14 or 15. Well, they need to get the price up there so there's enough liquid up there so that they can sell it.
Now, we did just close our weekly candle. I'm going to take it over real quick, and then I do have to get my daughter to bed, so I'll be gone for about 20 minutes, and then I'll come and jump back on. Where did my let me exit here. All right, so let's take a look at short term. I know some of you guys are margin traders. looking for positions. We've got our 4-hour is setting up for a potential tweezer top rejection at that 50 MA. As I said, that would have been a decent hedge place. Nothing conclusive. The weekly is basically closed at the exact same closing, the weekly is just barely above resistance here. So that could be considered bullish because it's closed just barely above that. So we'll need a little bit of time confirmation here, but we might be able to get, long. I was looking ideally for a long entry closer to, yeah, we're actually rejecting off that 200 MA right now. Right there. One resistance, two resistance. So we've had 3 wicks on that 200 MA. Usually we see these BART patterns come up to, 11,77800. That's where I thought we were going to come to. Those BART patterns usually come up to around the 786 of the previous move. And that's where I was looking to potentially take a short. So you see how that 786 kind of correlates right there to that action. So 11.75, that's where I was going to look to see where we got the reaction. But it looks like we're just rejecting for now. But too little time movement to really give, just very little volatility to really give any specific trend analysis right now. I usually look for really big oversold or overbought regions on like the 4-hour and daily where I can take a little bit of a bigger position. So we had this bounce pullback. We made a higher low. We moved up here, but we haven't had any sort of a pullback yet, even to the 4-hour level. So I was looking for a little bit of a deeper pullback. The algorithm that I've been using to trade off of currently is showing a short from basically as high as you could get an entry. It's still showing short to the downside. So for me, I'm still looking at potentially buying back lower. I'm flat at the moment. I'm not in any sort of long or short trade at the moment. This would be a decent short area just with a rejection on the 50 MA on the 4-hour as well as the 20. That's a decent area to short. But for me, it's just not enough confluence. We're kind of we're in a position where I just don't like the price action overall to take a short, but very, very low risk. You could just say your stop just above that 20 MA for less than 1% move. If you want to hold that and then, short to the downside and hopefully buy back lower, that is definitely an option. All right, guys, I got to get my daughter to bed. It'll take me about 15, 20 minutes and then I will be back. Chinggis will take over and he will cover some of the other stuff we were going to get into, which is major SR levels, what the weekly candle kind of says, some, long-term trends. That's down at the bottom here, but we'll get into some traditional market stuff, SPY, the Dow Jones, how that's looking. We're also going to look at the Chinese currency, which a lot of people are considering a narrative for this Bitcoin bullish move here was when the yuan went down. We saw this massive kind of inverse correlation to the yuan going, obviously the yuan going up in US dollar value means the yuan's weakening, which is good for Chinese trade, bad for US stocks. There's a lot of kind of pieces that kind of go in. If you're not familiar with how foreign currencies work with the markets, I'll kind of get into that if you guys want me to. All right, I will be back in just a little bit. Chinggis, you could take it away.
Yeah.
What I would suggest is the blue candles, for some reason, they're a little bit blurry on the Streamlabs. Someone said it was a little bit blurry. I tried to zoom in.
Okay.
But maybe if you've got like a red-green theme or something.
Yeah, I could dial something in. That's not a problem. Easy.
Perfect. Okay. Any questions you guys got? Make sure you throw them in chat, and I'll get to those. Or Chinggis can get to them as we're going through. All right, I'll be right back.
All right. Let's change these candles over here. What do we got? It's white, gray. That's probably not going to do it. Go the old fashioned, red, white. What do you think? All right. If that works, let me know. Then we'll take it from there. Okay, so let's see. Yes, I know the chart layout changed. Gotcha. Thanks for the update. All right, what do we got here? This is 88. So let me go ahead and we'll throw Bitcoin back up. I know we were going to talk about some levels more on the weekly side, so I'll just throw the Binance chart up real quick. Let me kill this super trend off here. Okay, so looking at weekly chart, and we just closed that candle down, right? So like Jacob was saying, the close right here, you can see the high on that was 12,330. The prior one, that was the big one to get over, was 12 even. So up, you know, $330. It's really not bad. The high, even though this candle was bearish, hit 13,147. So that was, you know, pretty good as far as highs are concerned. Now, body wise, we're talking 10,854. That was your open here, and you're open on this one 10,929. So you're talking just about 100 or so bucks. Not bad. So as far as levels are concerned, weekly wise, we did cross over this body candle. So let me just get rid of some of this junk on here. We'll just start fresh. And let's get rid of this volume because we don't need it just for now. Okay, there we go. All right, so weekly wise, you want to take a look at levels like this because these tend to, at least for the moment, these are the important levels. This is the local trend, right? So this is what you talk about as you're on that 4-hour and 1-hour chart, and you're looking for longer trades, swing trade setups that are going to last you, you know, 5 to 8 days, 5 to 10 days, in that ballpark. These are levels you need to be mindful of because you're not really going to notice them on the 1-hour and a 4-hour chart until it's too late. Little did you know that was a weekly support, right? It was a really important level that you weren't aware of. So when I look at charts, right, I almost always start on the monthly, depending on the market. If it's a traditionals, you know, I'll definitely be on the monthly because you have years and years and years of of data for some of those companies. So once you have your high, right, find yourself your low, right? It's kind of that easy. So we could see right here, body wise, again, right? So the low side on the body. So for the bearish candle, that's going to be the open 10,590. And then of course, you know, you're on the same side here, right? So these should be identical because it's crypto. 24-hour markets, you always have the same thing. So you identify candle height, high and low, and this gives you at least an area of importance on the weekly time frame. This gives you an idea of things that you need to pay attention to if you are to cross lower, what you're going to start looking at. As far as zones are concerned, you know, for supply and demand, we talked about that before, these wick areas down here. So we go back to the daily, right? We'll put the 24-hour chart on. You'll see the wicks. Now, again, like every exchange is going to be a little bit different, but the idea here is if trading is to come back in this zone, right, are you going to see buying or are you going to see selling? A continuation of sale or continuation of buy, right? So the way supply and demand zones work, right, these will be exhausted when price stays in the zone or passes through it, right? You want to get a close within it, right? This sort of means that everybody had their time to get their orders in. All the orders are in. Everybody who wanted to buy bought. Everybody who wanted to sell sold. And now you're done, right? This level is unimportant for the meantime, right? For the short term. Once you're through this level and you're down it, now you have to start looking into historical data and say, all right, well, what happened in that zone? So it's a good idea when you see something like that to always look left, right? You always look at the rest of the chart and see what kind of reaction you had in those zones. So it turns out that this area right here was your little sandwich pattern, right? This was your one area, right, on the daily chart where you had hesitation in this whole trend. So if you're looking at it in that perspective, look at this. Look at the low, look at the high. Okay? you're looking at 85.99% up. You're talking about coming on the low side at 75.20 and the high side at, we'll call it 13.9. The only area in this whole trend, besides right in the beginning, that you had hesitation was right here. All right. So this is what you look for. This is an area of interest, and it'll be an area of interest until it's exhausted, which is this right here. You came back to that area because there was unfinished business right here, right? And that's why you came back. You came back and you had to fill those buys, right? You filled the buys, you pushed it back up. Same thing on the top side. So don't be fooled that this is just a bullish thing, right? It's bearish as well. So this right here is indicative of selling, right? It's the exact opposite. So if we're looking at this, all right, we can clearly say, all right, when price came up here, everybody sold. They sold, and they sold quickly. Now, again, this is on a daily chart. If we were to go to a 4-hour chart, a 1-hour chart, a 30-minute chart, that's where you could start to see how long does it actually sit in that zone for before it's bought up or sold. Something like these wicks right here. Some traders will completely discount them as irrelevant trading, and I don't. I look at it as it's valid trading if it happened, longer than the 5-minute chart, kind of. So I'll zoom in, and let's do that, right? We'll do a quick little learning session here, real quick, if you don't mind. All right, so this is our area that we're looking at, right? So let's look at the 4-hour chart. It's no big deal. So we're going to go back to that area and we're going to say, all right, are there two huge wicks, big giant wicks here, or was there actual trading? So on a 4-hour chart, right, this looks like trading. We had a big dump down, a test on the low side, right, bought up within 4 hours. We had another push to the downside, another push, bought up real quick, right? Then we had buying come in, tweezer top, so unable to secure that high side buy, pushed right back down, another 4-hour push down, bought up below it. So now you could take a level like this and dial it into, well, this is kind of the important area, wouldn't you say? As opposed to that whole zone, this is kind of more important than looking at that big giant area, that big giant wick, those two big wicks, because this is a little bit more detailed. Right now, you come down into this zone. This is the area that's kind of important. That's where all the buying happened. Now, you had all the buying happen here. You had all that buy, and then you came right back down, right? So you had more people buying here. So you sort of skipped over to zone for a little bit. Same thing on the top side, right? You had the big push up, right? And then you came all the way back down. You closed the candle all the way down here. You opened up, but then you bought it all. So we're good. This area is, if you're familiar with like gap theory, right? It's very similar. Like you're sort of bringing the chart back to a balance. Like you're putting it back into whatever harmonic resonance or whatever you want to call it. It's happy, right? It's found its equilibrium. Every chart, right? Every single chart, every single candle, right? It'll tell a story of what's happening, right? The current fight that's going on between the buyers and the sellers. And that's what every chart is, right? Every chart is a visual story for you to take a look at and say, what happened over here? What were the buyers doing? What were the sellers doing? Why do you have, patterns that emerge right here? So you have a symmetrical triangle, right? So we'll draw that on real quick so it's easy to see. But there's psychology behind, what the pattern actually means, and why that trading happened the way that it happened. So, we don't have to get into all that fun jazz right now, but just understand that when you have something like this and it has data behind it, right? It has, 10,000 symmetrical triangles tested over the course of 3 years of trading, and you have a strike rate of 45 or 50%. that gives us as traders confidence to take it one way or the other. A break to the downside, right? And then you're looking for a downside measured move from the size of the triangle, right? From the mouth, right? Open right here. Break to the upside, same thing. So you would essentially just take your measurement tool and you say, all right, so from top side to bottom side, this is the move you're looking for, right? So the break to the downside, as unfortunate as it may be for a lot of people, you're looking at around 10.6. Now, a break to the upside, if it were, which it didn't, but that would have brought it right to 13, which would be interesting because that would be right at this level right here. And then you start to notice as a trader, hey, I have all this confluence everywhere. That would make a lot of sense. Generally speaking, symmetrical triangle at the top of an uptrend would break to the upside. That has a lot to do with advanced ABCD patterns and dealing with just structure. You got a high, then you got a pullback, right? And then you got another high, so this would essentially be like your accumulation area. It would sit like in this zone. And then what happens is price will consolidate and then crush itself into an apex, at which point it is acting like a spring being pulled back. And then all that energy needs to blast off somewhere. So in this case, it blasted off right here. But if you notice, like right where it blasted off to, you see that line? Remember where that line came from? That line came from the weekly, right? So that's why it's important to plot those in advance, right? You wouldn't have known that this was the weekly body open or weekly body close. You're on a 4-hour chart. But all of a sudden, it makes a whole lot of sense right now. That's where all the accumulation is happening. See, everything that's going on the 4-hour chart right now, it's all being hinged on that one price. So price being 11,400, 11,406, right? You can see spinning top, right? This is indecision. A drop to the low side, push down, 2, 3 candle wicks, all bought up right at this level. So we know after what we just talked about, 11,306 and up is safe for now, right? Buyers like anything underneath that, they're buying it all up. Push up, failure to break and close above, failure to break and close above, failure to break and close above, failure to break and close above. What does that tell you? 1, 2, 3, 4, 5 candles all in a row. So 20 hours worth of trading, and you're unable to push past that level. So that means one of two things. Either that level of resistance is very strong, or the more you smack that glass, it's eventually going to break. It did both. It broke to the upside, and then you gave it all back. So this is a false break, right? So we got a false break to the upside, push back down. Now we had the massive sell-off right here. This Bitcoin is probably a stop hunt. So I wouldn't, like I said before, like I look at wicks if they make sense. So I would have to drill down into an hourly, a 13, a 15, a 5, and see if this is actual trading or if it's just a big giant wick. Tweezer top, false break, pushed it right back down below our resistance line. And then now finally a big push up and the pull. Now we could see on other charts, right, how this is part of that bigger area, right? This whole zone right here. Again, we're just on a 4-hour chart. So once you zoom out and you're like, oh, let me throw some lines on here, say all of a sudden this stuff makes a whole lot of sense. So we throw our array on here, and this is from our swing fail. And we say, all right, well, now we have this right here, and we have coinciding and confluence within our price and our rejection, right? Oh, ooh, let's close. What's going on? Get out of here. Get out of here. Get out of here. All of you, get out of here. There we go. All right. So now you can see this starts making a little bit more sense. Not only were we getting rejected on our weekly, right? We failed to break and close above our swing fail line. This was the original break, came down for a retest, failed, pushed back up, failed again, held it once, pushed, retried, and now you're doing like that little J move, right? You're trying to push down and roll it back up. Even then, if you're able to do that push, break, and retest, and find support on this line, now you have new local levels like this level that you need to get up and over. So it's an endless game of, support and resistance and what levels make the most sense and what areas are stronger than others. But for the most part, think about the higher time frames as the I don't know how to word it properly, but the stronger of them all. Weekly sort of dominates daily, which sort of dominates 12-hour, 6-hour, 4-hour. And then when you get into the minute charts, they have their own patterns and they play out well in respect to the time frame that they're in. But at the end of the day, you're not making any major long-term decisions on a 15-minute chart. It's just not the way it works. But you can see like how we were zoomed in on that 4-hour, how little it actually represents of the overall bigger picture once you're on the daily chart. All right. So let's see. Sometimes I get a little lost when I got the chat open on the other side. So let me just take a look at that real quick. What do we got here? Looks good. Link USDT for a good long-term entry. All right, let's take a look. Link USDT. All right. Look left. Good reminder. Yeah, always look left. So yeah, I'm on my master chart. So we're gonna you get to cycle through the eyes of a madman for a little while. So good for you. All right. Long term, I could probably put that back on because there are trade ideas on there. So let's do this. Go ahead and look into the mind of a madman real quick, and we will see a lot of stuff. Essentially, here's what we're looking at, right? Let's take all that off just for a minute and just take a look at just simple structure, right? Here's our opening. We just came in. We just got listed. Pushed up a little bit, few days, no big deal. Dropped down, found a low, new low, around 35 or so cents. Let's see, the actual low looks like 35.04. From that area, we essentially consolidated with a couple of pushes up and then pullback. So smaller pushes with deep pullbacks. Another push up, another deep pullback. But at the end of the day, it's still a trend, right? This is for sure a higher high and a higher low. So you have a low, right? You have essentially this whole area is a high, right? And then you have a higher low, a higher high, a higher low, a higher high, a higher low. Right here, right? Your next high that failed to make a higher high becomes your swing fail. So I can't break out the drawing tool now because if I do, everything comes right back on. So just visualize a line from the top, right, to the fail. And essentially the fail is really right here. So this line would come across in this ballpark, right where you have all that confluence of all those MAs crossing is right where you start getting a higher slope and a push to the high side, right? So this is now new all-time high territory, $1.47. Boom, right? Big move up. One dramatic pullback. And I only say dramatic because it was, longer than a day. At least for this particular trend, everything happened inside of one day. So it was up, down, right? 1 day down, 1 day down. This is the only time you had 2 days down. And then you had a massive candle make up for the difference. So we look at that as price action traders. We look at why that makes sense. Is this an area we need to retest? You know what I mean? Is there so much hesitation in this zone where for whatever reason, 67 cents makes a lot more sense? Maybe. Let's take a look at the rest of the chart first. All right, so we come up, we make a high, right? That was all wicked out. So instant selling right away. People must have had sell orders, probably at $1.50, scaled down to like $1.45 in that ballpark and just ripped it all the way back down. So all the highs you got, you ended up closing at 122. everybody was still pretty bullish on it, came back up, got yourself over to 134 ballpark, and ended up topping out again. Your new swing fail at 144. This created your downtrend. So this is your swing fail, or that's your swing high, which ends up creating your downtrend. So your downtrend pushed down to about 83 cents. So now we could clearly see, right? We had a very slow accumulation, kind of, boring uptrend to its first major pullback, right? So this zone right here is important. This area right here from 60 cents to 42 cents is probably the most important thing you'll see on this chart. And that's because it was the highest it made within its inaugural ascension, right? Its first trend, and the deepest pullback that it had since then. This is the first time it needed to find support in a major way. This is coming off a failed, attempt to make a higher high. So that's why this area right here is important. Then we established our low is now considered our swing low. And our swing low is the low that forms the trend, right? So this slope right here is because of this one candle. You blame everything on 42 cents, right? Everything happened because of that. Now we have something we can look at. Now we have a low, now we have a high, now we have a higher low. So now we have a measured pullback. This measured pullback is what creates this next high, right? So now, as far as structure is concerned, if we only looked at structure, right now, the level to come back to is right here, right? This high, $1.48. And why is it $1.48? Well, it's really $1.34 to $1.48 because these areas are all wicked out, right? This is an area right here where there's a lot of people trying to sell, right? And even though we came to it, this is considered, if you think about gap theory, right? This is considered just smashing through that level, right? That didn't give anybody any chance to do anything, right? It just ripped up from $1.01 to $1.86. Is that $1.01 or $1.10? $1.10 all the way up to $1.88. Nothing happened here. You skipped right over it. So structure-wise, this is the optimal entry point. This right here. Price would have to come all the way back down here in order to give these areas an opportunity to get back into the trading cycle. That'll clearly test this area as a good area of support because this is major resistance. Came back up, failed again, major resistance. Drop back down, push back up, never even made it. Drop back down, came up again, a lower low. So now you're in a local downtrend. And then when you pushed up, you smashed through it. And when you came back down, you just barely touched it. This is your retest on the local side. So now let me put all this crap back on and get like an overall idea of what we're looking at, right? When we look at that same level and we push back up to it, that's this line right here. And that's why it says Hail Mary buy orders. This was not meant to be streamed, by the way. So the Hail Mary buy order for me is like, this would be the optimal area, but it doesn't necessarily mean we get down that low, right? Price can find support in a lot of different zones. After we pushed up, this one candle coming back and testing that support line sometimes is all you need. And that's it. Then you look at global things. You look at larger things. And by looking at larger things, right, we take our fibs from our low, right, to our high, and we look over here. I know it's super hard to see, but that's our global 6. I call that global, but that's our like whole trend 618. And that whole trend 618 lands on the above move. So this is the Hail Mary, right? That whole zone right here. That's why that green box is there. That's the Hail Mary entry. The one above it right, is the next push up. And it's the same idea, right? We pushed up, we wicked out, we dropped down, we pushed back up, we made a higher high, we wicked out, we came back down, came back up, and then smashed that level, right? This is just trend. That's perfect. Everything that happened here is perfect. So coming back to this level would make sense because this would be an area of interest in order to find support. We did the same thing right here. So now we look over and we say, oh, that's our global 6. So that's our 618 on the bigger move, right? The low to the all-time high. Pushing back and finding support on the 618, that would be enough to say we don't need to come back and retest this support level. That sort of outweighs, right, what we already looked at. So when we take a look at optimal entries long term for Link, optimal for me would have been $1.47. Once that 618 was formed and we pushed and found support, well, the optimal entry now is 196, right? That's the area to come into. Now on the local side, we can see we're starting to at least form the very first moments of a reversal. Reversal plays are super high risk. And they come with, a failure rate that I don't even know the percentage of, but it's a lot. You'll notice if you go back in the chart, every time you're like, oh, it's a reversal, look back and see how many other, oh, there's a reversal, and it wasn't a reversal. It just led to more downside. This right here, low, high, higher, low, and you're automatically saying, oh, the next one's going to be a higher high. Bam, we got a reversal. We're good. And what did it do? It went sideways for 4 days and then dumped, retested, came back down, and then dropped even lower. Right. So that's why you can't put a whole lot of faith into this move until it's actually created a move. So what does that mean? It means you have a low, you have a high, you have a higher low. Until you make a higher high, this is suspect. Until you're at 273, this is just as good as being in a downtrend because you are in a downtrend. This whole thing is a downtrend. Until you're above this level over here, 458, you're going to stay in a downtrend. And that's because the price dictates, right, what trend you're in. On the local side, if you're put a 1 hour chart up, so we're on 24 hours right now. Let's put a 1 hour chart up and then we'll see the difference on what it looks like on a 1 hour chart. 1 hour chart is going to show you we're in an uptrend and we are on the local side. And that's perfectly fine if you're trading on the local side, right? You have a low, you have a high, you have a higher low, and you're trying to make your next higher high. This doesn't change, right? You still need to break up and above 273. But this at least gives you a target to get to 273.
It looks like it also tagged the 78.6 there. I'm back.
Jay, God, what's going on? Yes, so it hit the 786 on the daily.
Oh no, just the hourly. I was just saying
that. Just on the hourly.
Pullback
okay.
Looks like it was a 786.
Okay.
Yeah, we were talking before the stream started. I just read an article that was saying that Link has sold close to $40 million worth of their token up in the $2 to $3 range. So, just be cautious of a team that's kind of selling their holdings. What's interesting about Link is that there's about 1 billion token supply, 350 million circulating supply, and 650 million kept by the team. And the team, so a team has 65% of the total supply, and they've been selling a lot of it in the upper echelons, even though they raised about $33 million in their ICO, and they only raised that 2 years ago. It's crazy that these companies go through $16 million a year. It's nuts, but
it's like that quick. And then what do you have to show for it? like where did 16 million go? Did you print that many T-shirts and hand them out? Like I don't understand where it all went.
Apparently they've got some Microsoft partnerships. I don't know. Who knows? Bunch of
I think the biggest partnership that at least has some fundamental to it, there was at least acknowledgement on the other side, was Oracle.
Yeah.
And that's only because Oracle actually had an event and brought Link. It wasn't a Link event that brought Oracle on. It was an Oracle event that brought Link on. And I think that's the only thing that gave it all that validity. And that's this right here, believe it or not. I believe this was Oracle. And then what was it, like a week or two later was Google.
and
Oh,
Google.
that's
Yeah.
what it was. Yeah, yeah, yeah. You're right. And then since then it was like, all right, guys, it's time to time to cool off for a minute.
I can show my Link chart. We'll see. I'll see what Link's doing. Link was a trade that one of my analysts just put out before the candle closing. He put it out at sub 20,000 though. I think he was looking very small time frames.
Okay. Sub 20. Yeah, we're
Yeah,
20.
so I was looking at oh, are you on BTC or USDT?
I just switched over to BTC. I saw in chat it looked like Nathaniel wanted BTC instead of USDT. So.
Okay, perfect. Well, BTC, there was this definite like trend channel that had been forming that I was watching. I think I even put this out in the on-demand TA. Someone was asking about it. I said if you were going to buy, this would be the area to buy. We got a really strong candle afterwards. It's up like 14%, which is good. Nothing to write home to mama about, but especially in crypto. But we did get the 20 MA cross on the 50. We kind of held the 100 MA. It's a little bit ambiguous as to whether that was kind of a 100. It was probably a little bit more accurate on the EMAs. Let me look at all the EMAs here. No, nothing on the EMAs. Nothing really, especially on the daily. Probably a little bit more accurate on the 4 hour. Nothing there. Let's see the 4 hour over here. No, kind of random. Kind of a random place to bounce. I could probably throw up some fibs. Did you see where that pivot came from?
No, the last one. Yeah, actually I do. It is off the oh man, it's all right. So from the broadening wedge that started back on July 23rd.
Maybe that's 786.
That's our pivot point right now. It's like it's perfect.
So yeah, so Link, I was looking top of the channel, 200 EMA for a retest there, maybe the 200 MA. You can see we wicked to this 100 MA a couple of times. We're testing that right now. I held it 1, 2, 3. Let me see, 1, 2, 3, 4, and this would be our 5th time. So we really need to push above that. But the EMA is kind of holding us up right now. But I would look for a sell at the top of this channel, which is probably like somewhere mid target too. Okay, so you got into Link. Did you go through any of the traditional market stuff? Do you guys want to know? Would you guys want to cover traditional market stuff, or would you rather just focus solely on crypto?
I didn't even get to it.
You're not even there yet.
No, right, but yeah, I don't whatever they want to do.
Somebody was asking about EXRP as well. For me, crypto. Okay, so we only want to look at crypto. That's totally fine. XRP. Not too much, man. I'd probably be a buyer close to the 1200 sats zone. I mean, I don't see anything that really's got my interest yet. I mean, there's some bullish divergence, but we're still definite in bearish territory here. So you can see how we came up, tested 50. What are we? Yeah, we're on the daily. So this is all just kind of bearish territory. Actually, 60 and below is what is known as, for me, the bearish control zone on RSI. Even 70 right here, you can consider that bearish. But everything basically like here, that's all bullish territory. Like we couldn't get above 60 at all. 60 down to 0 is bearish control zone. 80. Like 40 to 80 is bullish, and that's if like the RSI is kind of trending up above that. So this was like a mini bull trend when so it was 60, 60, 60, but when we broke here, that was the start of like a mini bull trend where we saw like 130%, but then we basically broke back down right in here. So that was the length of the trend, 114%. Then we lost our trend, and this is a very big indication that you're starting a bear market when you start to see the RSI penetrate that 30 level. Usually it means it wants to push to the downside. Momentum is weakening, and price structure was kind of showing that at that level. So XRP not showing much yet. We've got a little bit of bullish divergence, but as you can see here, we had a bullish divergence there, and it looks like now we're kind of hitting a little bit of resistance level. So we have to really kind of see where it goes from here. There's nothing on this chart that really shows me that this is out of the clear at all. If we close all this down, you can see this trend line that I've got formed here. I'd really want to see that reclaimed. So I would play this more from a breakout and then retest play than I would trying to long into this massive downtrend. What are you seeing on? I'm gonna share my screen again. What are you seeing on XRP, brother?
For BTC, I like the USDT chart for XRP. I'm sorry, because
it makes you feel good.
Well, I mean, it's just it's been I was joking with somebody. I'm like, yeah, I'll start trading again when it goes down to zero, and it's kind of just been a disaster, which is great. It's a lot of opportunities. You know what I mean? Now on the
I tried to
BTC
trade
side,
it twice and got stopped out both times, and I just said, all right.
on the BTC side, I look at that one zone right here. So right where you just had highlighted over by September 18th, that one low that it made, and then we had that one high right after that. It just kind of ripped all the way up there. The level I'm looking at on BTC is 1990.
2000 could be
2000.
Definitely psychological level 2000.
Yeah.
Go to the left. What does that 1272 line up with?
Let's see. So right over here, the area that it popped in was the first hesitation before the drop, right? So you had, for Binance at least.
Well, that
right?
1272 actually looks kind of similar to that little rejection wick right there.
Yes, it is.
Yeah, right there.
I mean, it's almost right on. Let's see. The low was 1997. So on that wick, it was 1997. So a 1-2 drop from here would at least make sense. From 1 to 1-2, it's really not much, right? You had one area where it popped up, and then you kind of gave it all right back.
That was the MoneyGram announcement.
Is that what this was right here? That was
gave us like 3%.
May 13th. Okay. And then we gave all that back within whatever 2 weeks, gone. Then we pushed back down a little lower. We had a little bit of a relief, and this could have been Bitcoin. That's one thing you have to consider when looking at these altcoins is this whole move could be just because of something Bitcoin did, and nothing to do with XRP. And then it dropped back down again, gave ourselves another low, and then this was the first time in this trend where we had a pretty significant trend, right? Where the slope was right, the trading was correct, everything was okay. It was just so slow and methodical that when you drew it out, it was like essentially a perfect ABCD. You sort of just knew it had to drop. It had nowhere else to go. So because of that, right, you ended up forming that diamond. So this does have further to go down, which would make more sense. And that would probably leave you somewhere around that 1-2. So that's kind of what I'm looking at. I'm looking at sort of picking it up at 1-2 and at least seeing what kind of reaction happens down there. And if it's, a reaction that looks bullish, it could be a short-term trade with a very tight stop and just allow it to become bullish. If it does what it needs to do, that's great. You can start reclaiming some of these levels. There's about 1,000 of them on the way back up. And if it doesn't, just get right out, because the downside, we don't know, right? It could end up coming down 1227. It could wick all the way back down, similar to this over at 54, or we get to the, level where it's just free and they just start giving you XRP. Maybe they'll pay you to take it off their hands.
Somebody's asking about ETH. I'll go through mine first, and then we'll kind of tag team that and kind of show. Now, one thing on XRP real quick, as I was looking at your chart there, I was seeing that volume is really, really dramatically dropping off during this recent price decline. In through here, there's still definitely some sell volume back here, but that could be an indication that we might have some sort of hope for a potential reversal. But right now there's not really any indication showing that it's in the cards.
It's anything but in the cards.
Yeah. So ETH, XRP USD, I can look at real quick since somebody was asking about XRP. Basically flatline, still at 30 cents. Very accumulative. but the BTC value has definitely been beat up quite a bit. So if you're going by USD value, it's really held its own quite well since 16th. And by hold its own, I mean it hasn't gone down. I mean, if you were holding XRP, you would have missed out on the 300% Bitcoin rally, but you would be nice and stable in XRP value. And we are on a key SR level here that if we do break and close below 26 cents, I expect a retrace into the 20 cents, 21 cent, 22 cent region or range. Okay, so ETH. Take a look at Ethereum. Potential bear flag on ETHUSD. Pretty classic bear flag. But we were in a pretty strong macro uptrend. Actually, look at that. That's actually quite beautiful. So we're finding support on the previous diagonal resistance from that, basically a cumulative bump and run accumulation range throughout all of 2018. We're sitting on it as support. So not as bearish as the initial assumption of a bear flag when I first looked at it. We tagged the 786 off of the first corrective pullback at 193. So that would have been a decent area to add to a long-term position. Let's look at the full move, see if there's a little bit more accuracy. This could be the 618. Oh yeah, perfect tag on the 618. So the 618 and 786, they kind of line up confluently. This price decline didn't really have any strong volume selling. We're on Bitfinex. I can look at ETHUSD on Binance and see same thing. There was a little high volume selling there, but this could be an indication that we are actually bullish on Ethereum because there wasn't really any high volume selling. When price goes down and you don't see volume increase, that's usually pretty bullish. Obviously we took that long in Ethereum. We sold right before that massive down wick. We're sitting on support right now. So this could be a decent area to look to enter into a position. Let me look at the moving averages, see if we've got any confluence here. We're sitting on daily. We are kind of revolving back and forth around the 200 EMA. Nothing too obvious here. Let's look at the 4 hour. 4 hour got rejected by the 200 EMA right here. So that's going to be the level to watch. And the 100 MA is starting to reject it now. I mean, we are in a short-term downtrend, so I'm leaning more towards the bearish side, but there are some things that are showing that we might have our support from over here. A little wishy-washy on this. Could be an ascending triangle. Yeah. Let's take a look at your let's take a look at your Ethereum chart and see what you've got for me.
So on the weekly side, the longer play, right? We lost our 886, a long time ago. But we pushed back up in December, very much like Bitcoin. So there's not too much here that hasn't already been discussed as far as the longer term. We're in an uptrend. We have been just like Bitcoin. Since December, we pushed up. We made a high. We made a higher low, higher high, higher low, higher high. Currently, we're at our higher low, which is in confluence with this longer trend right down from the stem. Now, it's not necessarily a trend, but it's at least a confirmed area of support. We've used it 1, 2. This would be the third time. So that's on the weekly side. On the daily side, things get a little bit more interesting with ETH because the movements aren't necessarily 100% dialed into everything that Bitcoin's doing. Very similar, but not to the extent we've seen in the past where, one goes up, the other goes up, one goes down, the other goes down. This has been a little bit different. We had a very nice triangle coming up here, which was very good, broke to the upside, which was great. This is essentially the retest level here, which is where we would have been pushed up through, and then we've lost it. So we're painting an M, which is bullish for now. So we have our low, we have our high, we have our higher low, and then we basically have our double top and drop. So we look for support here above our low. And if you're able to maintain this, then you're looking for a break to the upside, which would essentially give you more of a larger pattern, which is basically a big W. So you would have 1, 2, 3, and then 4, and looking to get back up by that 786. So essentially the big drop that came down here, your hesitation level right here, you want to get back to 275. This is going to be an area of interest on the way up for sure, I think. And then our local area is this zone right here. So this little hesitation candle on the drop side, right? We got all that and all that buying. So we have to get through all this. So I would sort of look at just this one area as just a local double top with drop, push up to the upside. This is the first area I'd be interested in. A break and close above here. And I would imagine we kind of have coast is clear up to 310 with all of this garbage in between. You know, this whole area is ugly, and it's massive accumulation, a ranged out zone, and this is on the daily. So imagine what these look like when you start getting into the 4-hour charts. But that whole area was completely skipped on the drop. So because we accumulated everything here and we smashed down, broke those two levels, right? This whole zone right here is being accumulated now. That's this skip over right here. So now we have this area that's already taken care of. So we can just as easily smash back up, ignore this area completely, or get stuck in it for, for another 3 weeks and ping pong around and play the range game, which is okay. It's not the end of the world. If you dialed this down into range, essentially, if you wanted to play super conservative, you could ping pong this area here until it becomes invalid. But basically, you would always buy at 207 and you would always sell at 228. And, you know, you're not going to become a millionaire that way, but safety in numbers, 10% plays every time. This is E2, so you can short it. And it's 10 up, 10 down. And you would have been able to do that 1, 2, 3, 4, 5, 6, 7 times already. That's 70% you would have made just in this one stupid range. And these are plays that happen quite frequently. Unfortunately, with stuff like this, a lot of it is hindsight. You don't know you're in that range until, you know, you've made that second high. So it does get a little bit irritating by the time you start range trading, the range is over. But that being said, some of these ranges, like we saw a few months back, we had ranged out coins for 180, 200, 220 days. And they were maintaining on those alts, they were maintaining ranges of 25 to 30%. So that was key time to be trading some of those, at least in the ping pong style. This could very easily get a couple more range plays out of it. But I believe that this trend is going to get tested. So at least a push up, another push down would be another higher low, but somewhere in this ballpark over here before we come back up, break through this level and push to the upside. The volume is, you know, below average. It's not good. It's low on the whole, but it's pretty much in sync of how it's been for the last month or two. We haven't seen anything with major volume, well, in a while. And now with the overall volume to the downside and a slight push to the upside, right, that does become a little bit bearish. So it is in one of those little holding patterns where if it maintains this channel, I'm on board. The second we fail out of this channel to the downside or to the upside, it's time to rethink the plan completely. But for now, I would maintain this channel, find support down here, push back up slowly up to the 786, and then sort of reevaluate when we hit the 300, 310 zone.
Yeah, perfect, man. So similar but dissimilar in the way that we would approach that specifically.
Yeah. I mean, 1,000 different ways to look at the same chart, right?
Absolutely, man. That's why there's so many different analysts with so many different indicators. Like you said, there's a million different indicators that you can combine to do all that stuff. So any other charts you guys want us to look at? I'll kind of go through some interesting stuff that we can look at. So one of the high volume charts. Okay, so somebody just asked about Ren. So Ren and QKC were two charts that I've been watching specifically for a pullback to get in, and we're currently breaking below the 4-hour 200 EMA 200 MA. It was really honestly one of the only trending coins that I saw that was still in an uptrend, but we haven't really lost our support yet. Our support is still down here. We could get a bounce, so 960, 970 could be a decent area to buy in. We did close below this a couple of times. Let's take a look at the daily, see if we've got anything there. We are getting close to this 50 MA, which we tested once and twice down here. So we might want to wait for this 50 MA to kind of come up a little bit more. But Ren still really looks really good from a higher time frame perspective. We're still in an uptrend. We've got some lower highs here, but we're still forming some higher lows in a local time frame. So Ren still looks pretty good. We've got a bit of a wedge forming on the RSI here. Hopefully we can see that break up soon. Let me look at the volume on Ren. 24-hour volume is pretty abysmal. It's only 299 Bitcoin. The 24-hour volume is about the 60-minute volume is about 9.5 Bitcoin. So a lot of volume drop right now for alts, which is interesting because after the daily closing, we usually see some big volume come in. But you could be a buyer in between 940, 970. I think that you'd feel be pretty safe, and a stop below this 100 MA is a very, very conservative, safe trade. We've also, we can move this down a little bit, but it looks like this is probably our resistance that was flipped support. So anywhere from 930, 915-ish to 940 to 950. This zone right here should be totally fine for a long entry, if we can get it. Now, if it breaks below, I would wait for the bounce, retest, and then just close around break even. Because usually if it breaks, it'll probably bounce off this 200 EMA and then bounce back to the retest of the underside of the 100 MA. So if it does break in like a high volume candle, there's always opportunities to get out with that kind of breakdown retest. I know there are some people who are not interested in the traditional markets, but if you have time, can you please save them for the end? Yeah, for sure. Okay, so Ren was one. QKC is another one who's really trying to put in its reversal here. It's flat, but we had this really strong impulse back here, back in June, that did 100%. That kind of started to shift things up, and now we see this bottoming out, and it's very, very flat. The wicks are very, very flat, but the 20 MA did cross the 50. We didn't see much fanfare about it, but now the 20 MA crossed the 100. And so my target for QKC would probably be around this 200 MA at some point. But it does look like we're putting in some sort of a little bit of a bottom. And we are getting some decent volume on that. The other coin that's getting a lot of volume that's kind of odd for its stature was, let me see here. One has about 700. EOS is getting a lot of volume. Dusk, yeah. we already played. It's pulling back.
EOS was cruising today. I don't know what the deal was. I know IOST was moving, OMG was moving. All these guys got a lot of volume out of nowhere, and not a lot, but upwards of 7 to 10%. Yeah, for what we've seen lately, 7% volume bump is.
Yeah, it's been really hard to suggest to play alts because just the volume has been.
It's bad. Yeah,
a lot of these, even the majors right now, Matic is the highest hourly volume at 142 Bitcoin. So I have seen a lot of periods like this where they do drop to like 3 to 7 Bitcoin volume over a 24-hour period, and if you can get some long-term entries in those, when the market does come back, those things pop for like 100% because the liquidity and volume is just so low that they can be moved really, really easily. EOS still looks like it's in a downtrend. I would really like if we can flip this previous resistance here around 3,900, 3,870. I think that would be a decent place to take a long at. Let me look at something just popped off. I think Civic just popped off for like 20. Whoops.
I just got a Matic price increase up 3%. The volume's only 19 million. ONG and XRP. PAX. Actually, Paxos just bumped up. Haven't seen that one in a while. Volume's up 1.2%. So that's
Does that
one
mean
of
Bitcoin's
the.
selling off? So Civic had a little candle, little spike. What was that? Oh yeah, 13%. Gosh, these things are so cheap. So a little bit of a W structure here, kind of an ugly W structure. We tested the 50 MA on the 4 hour, got promptly rejected, but a nice breakout. We can probably look for a 78.6 pullback here, which would give us right back to that same price level, which would put us at 355. Obviously, these shit coins are super high risk. It's easier to play the majors with high volume, especially with dominance where it's at. Let's take a look at Matic. I'll do Matic and then I'll let you take Matic, and I'm gonna go grab a drink of water.
Yep.
Okay,
And
Matic.
Bitcoin did sold right to the 5.
What's it?
Like perfectly on the 5.
To the 50 fib?
Yeah. So 11,483 is where it's sitting right now.
Okay. So I missed it. We entered Matic on the 618 and the 50 MA. They took it basically like a stop run back down to this support 101, which was the 78.6 zone. It was super clean. We did get stopped out on that trade because we bought here, and I don't, the way that I'm trading lately is I just don't like to hold them just because the downtrend breaks so quick. But yeah, they put it in a 13% candle, and they basically just filled some long liquidity down here, and they filled it right at that 78.6. But I thought that 61.8 would hold really well because we had confluence with the 50 MA. We had that nice kind of hammer reversal, but yeah, they decided to push that through anyway. But yeah, so it's looking strong. It formed a higher low, did not get a higher high yet, but this looks more like consolidation where the trend is starting to turn. And so it looks mostly like, basically like a triangle. So we might get a retouch on the 618 around 118, where we can add in some positions for a move up. But now we've got these moving averages kind of acting as support. I know there are some. Okay, so nobody's really active in chat yet. So the more we do these, that we'll probably get a lot more activity in the chat. But and then from a high time frame perspective, we had that massive 400-500% move back here, and then we pulled back and it broke pretty much all structure. It broke even the 886. So they just took it like super deep. They had no mercy on this guy.
Yeah, they drove it. They stopped. They wicked down to the 886, pushed up all the way almost back up to the 618, and then just bled it out.
Oh, I'm looking at like high, like all-time low to all-time high.
Yeah, that's what I'm saying. I'm on the daily chart. So it wicked down June 25th down to the 886.
Let me see you. Hold on.
And then I got
the fib. Oh yeah, okay. So you're looking at that. Yeah. So I was looking at it. Basically closed like 4 days below that 886.
Right. Yeah. It's just in that ballpark. Got the 7.8 back, got the 709, pushed up to the 6.1, couldn't quite make it, failed almost at our 50, and then just this slow bleed. I mean, it was just disgusting. And then whatever level this ends up becoming, well below the 886. So
and they've got a Coinbase announcement now, but it does look like it's trying to put in a reversal for to challenge and push up. And get back into that bullish trend. And if it goes back into a bullish trend, I mean, we could see this thing push 1,000 sats, because it does remind me of Raven when it first got launched. Very similar price structure, around 150, 200 sats, pushed up to around 400, 500, and then it retraced all the way back down to beyond the 886. I think Raven did 100% retrace, and then it put in a reversal, and then it was 4 weeks, 5 weeks where it basically pushed up to about 1,500 satoshis on Raven. So
hell yeah,
could see something similar on Matic. It does give me some tingles of a potential 5x potential, 4-5x potential on that. So,
well, I mean, this is the first time. Let's put it this way, right? This is the first time since the second candle drop, right, in May, that we had volume.
Yeah,
like above average, where it was decent, right? We had volume over when we hit that 886 and tried pushing back up, and that was a fail. This is the first time we've had volume in this coin in a while.
I do like Matic because it is getting listed on Coinbase, so there is going to be plenty of liquidity after Binance kind of closes to U.S. traders. So I do like Matic from that perspective. Another chart that I was looking at, I'll bring mine up and then we'll switch to yours. Another, you know what? What's interesting is you can't actually see my price levels when I do that. Okay. So another chart that I was looking at was ZRX. We hit basically an all-time low. We're almost there. Super, super close. This may be an important level to watch. It looks like they're going all the way back there, and they're putting this thing in deep, 1,200 sats.
Holy crap!
Yeah, they put it in deep. couple of red dildos there.
I haven't pulled this chart up in a while. There wasn't really much need to.
So falling wedge structure, we keep tagging the same line, all of our moving averages are trending down. Obviously, this is a high risk reversal. We'll probably see this 1250 level, but something to watch, something to consider. That's on the daily. If we look at the weekly, we are getting close, same level, about 1,500 on the weekly. So the weekly could get tagged. Somebody wanted to see BAT, and then we'll flip over to you, and then we'll go from there. BAT, I was hopeful. Once we hit this key support that we tested a couple times, and we kind of were range bound, and this key support was usually good for about 150% move. BAT has some good fundamentals, but we did break this key weekly support, and we're coming down now. We did test the first bullish candle reaction here, so that could be our first clue, but the weekly is still looking pretty weak. Let's look at the 1 hour. We are, jeez, man, what a downtrend.
Yeah.
We recently broke an hourly downtrend and kind of moving sideways, and it looks like our moving averages are kind of coming underneath us, giving us support. I think that if we can get above this 200 MA, 200 EMA on the hourly, I think that'll be a little bit more bullish short term, as far as like you could probably play this up to the 2,200 level, but not a trade I'm particularly interested. I like more continuation trades, or at least trades that show me that they're gonna do something, just because of the opportunity cost. I'll flip over to you, and I'm gonna go grab a water real quick.
All right. Got my horrible bet. It's looking pretty bad, but it's trying. It's trying to make a little move over here. We'll see. All right, let's go chat real quick. Let's see, is anything you guys want me to pull up here? Notice some people here interested in traditional markets. Yeah, well, let's see. We just did BAT BTC. So if you got another crypto one, throw it on. We'll take a look at the chart. If not, we can start taking a look at gold, silver, DGI, that type of thing, the good old SPY, all that fun stuff. BAT USDT. Let me throw up USDT, because so you got BAT BTC covered. BAT USDT is a different story, completely different animal. But again, it essentially trades, this chart's a disaster. So let's just do that. get rid of everything, and we'll start fresh. So from the big drop, right? Oh, we had one area where we came up. We tried to develop a trend. We did have a low. We had a higher low right here, and then we had a higher high. So this is the first time we actually developed like an actual trend from our high. It didn't last very long and got pushed right back down. But the key thing to see here is this area right here. It's not a perfect double bottom, but for crypto, it's kind of close enough. And what we look for is a reaction, which is exactly what we got. We didn't get the reaction we got on the initial drop, but we are starting to create a reaction here. Now, the difference here is look how far away you were from your first area of dynamic support, right? Resistance, right? That's the 70 EMA right here, the little white guy. And it pushed all the way right up to it, and then it stopped. Well, it did the same thing right here. First candle, right to the 9 or 7, and then smashed and it found resistance, right? So, really not any different at all. If we're to throw the fib on here, so let's go from here and we'll go, it's not going to be exact because we're streaming, so we streamline things just a little bit. So if we look at this right here, we could say, all right, we found support where? Just above the 886. Not bad. So if you're, super analytical where you only play just wicks, okay. If you play bodies, then all right, a little bit better. So it depends on how you want to do it, but I look at things in both lights. I just want to make sure stuff makes sense. So for me, it doesn't really matter where the hell it goes as long as it's respected, because I want to trade the way everybody's trading. The way I trade is useless if it can't tell me how everybody else is trading. So if everybody else is looking at the fib this way, well, that's how I'm going to put the fib, because that tells me when they get to 29.33, they're going to respect it. Why? Because they respected it last time at the 618. My 618 is over here, and I don't get any respect over there. I got to start questioning why. Well, the reason is I got my fib set up differently than everybody else. So that's not good. So, and just like we were talking about indicators before, I don't necessarily use indicators all the time for myself, but you want to know how everybody else is trading, right? That you got to understand that as a trader, you're, essentially trading against all the other traders. And you need to know what they're looking at and how they're looking at it and why they're looking at it, because that's how they're going to make their decisions. So if I were to set my fib up some arbitrary way, like, over here where there's no level, and be like, I'm not getting any respect over at the 5 and the 3.8. Well, no shit. Because everybody else is looking at it like this. And if they're looking at it like this, and, that 618, that 29.38, well, that level makes sense. And the reason why maybe they bought it up down here, tried to close the bodies over by the 886 daily chart. That makes sense too. So again, technically speaking, it's not exactly a double bottom, but it is very close. In crypto terms, we're going to call that close enough. Enough buyers will see this and they'll buy. And like I said, last time we pushed right up. Our first area of resistance, dynamic, at least moving resistance, was our 7 EMA. We pushed right up to it, and then we smashed down, broke, and then we pushed up again, resistance, and then finally closed up above over it, and then we had our first pullback. Well, same thing here. The very first move we made was right up to the 7 EMA. 7 EMA failed, pushed back down, another candle up, didn't quite make it, and then we have today's candle, which is 22 hours and 45 minutes left for it to do something. One thing to notice on the USDT chart that's a little bit different is the actual volume, right? So volume on the BTC was very much in a downtrend, right? Very much in a downtrend, the whole downtrend, which is bullish, by the way. You're losing momentum on the sell side, right? There's less and less and less and less interest in selling at those volumes. So it essentially becomes reversal and it becomes bullish. We have the same thing here, but only in larger nodes. If you look at the actual, like the girth of trading, right? The meat and potatoes, the girth of volume. We've broken many, many, many times. We've broken that volume area. So BAT has this weird cycle. When people are really interested in BAT, they're interested in BAT for like 2 or 3 days, and then they just kind of forget all about it. You can see that in the charts, clear as day. 1, 2, 3 days, super interested, and then nothing. 1, 2 days, really interested, nothing. Sell, 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 sell. 1, 2 days, really interested, and not much. 3 days interested, not much. Sideways accumulation. 3 days interested, 4 days interested. All right, we're good. Dump it. Nobody cares. Big push up, false break, big push up, false break, drop back down to the same level right on the 618. And then you had these mega wicks, right? You're just testing this 50 MA for no reason while you're in this major downtrend, right? The reversal should have happened on the 618. That would have made the most sense because of this area on the previous reversal. So you had your opening, your big drop, right? And then your first actual channel push down for a big J hook. You came back up. So you see that big S that you made over here, that's your first big major pull. This is the one that sets up your all-time high, right? Because of that, that's the area, the local area that you want to come back to and at least test on a major pullback for continuation to the upside. What everybody would have liked to see after this coin was listed was something far more to the tune of a big low, a big drop, big push, over here. That would have gave you your ABCD, which would have been nice. And then they wanted to see the drop down here, and then you would have gotten something similar to this drop down here, right? And then your next big high like that. Unfortunately, that did not happen. So now we have this big, long, drawn out downtrend, and we have to play that accordingly. 886 is a good spot. This is a great spot. And this is also your first major area of accumulation, which is right here. So even though the coin was essentially just listed, it doesn't mean you can't have accumulation right away. You know, something
it
typically.
It was just listed on the USDT pair. I think BAT's been listed on the BTC side.
Correct.
Yeah, on the BTC side for a while.
Yeah, you're 100% right. You're 100% right. That was a newer pair, the USDT pair.
Yeah, they listed like BAT, Engine, a bunch of like random ass USDT pairs for a while. So one thing, guys, I want to go over this real quick just so you kind of understand kind of our logic at Signal Profits and what we look for. The main thing is, and I have put out just a few that kind of fall outside of these rules, but ideally, you really want to trade liquidity above 500 Bitcoin. We've kind of been breaking our rules slightly because the volume has been very, very low. Historically, 500 Bitcoin on volume was literally like the top, like 40 or 50 coins. Lately, it's you don't even see over 1,000 Bitcoin out of the top 4 or 5. Link BTC, you can see we've got 1688. That's something that you want to take a look at. You want to find entries because there's a lot of liquidity. A lot of people are trading it. You want to, if we come down here, outside of the majors, you've got Link, Matic, Dusk, Algo, Ren, Cos, Engine, IOTX, Raven, ERD, and Metal. So those are the coins that we're charting actively kind of on our watch list because they're the ones with volume. They're the ones that traders are trading it. So that's where we're going to be looking for entry. So any one of these, we can look for. Cost, I threw it out in the on-demand TA. It was just too new, too high risk. We've been stopped out on a few trades. I didn't feel super comfortable with it, but we did break that downtrend. We had that pullback here, and then who would have thought that this thing was going to do 170% in like a day? And it did. And then on a move like that, though, what you want to look for is you want to look for the pullback play. And usually the 786 is historically pretty damn good. But as you can see, they just ran it all the way down to almost that 886 level. And basically, they just brought it all the way back down to here. And you can see we've gotten rejected at the 20 MA. And we're finding support on the 50 MA right now. But again, very high risk, new coin. But it does have a lot of volume. So we might be able to find some kind of an entry on a lower time frame, say 15 minutes. maybe the 200 MA. So 200 MA, you can see here, acted as a nice 12% bounce. Down here, not much. Broke the downtrend. Broke up, pulled back. But yeah, that 200 MA is probably the only good trading opportunity I saw on that one. But yeah, so when you're looking through, the biggest thing is you want to see some good, solid 24-hour volume. Okay, so somebody was asking about Beyond.
Beyond Meat.
Oh boy.
Yeah.
I just did this. I don't know if you guys caught it, but I just did a live stream with Tone Vase. We talked about Beyond Meat. This thing, from a fundamental perspective, this thing is garbage. I mean, they had an insane market cap in there. They had like 20 employees, and their sales were like, I don't even know, like 10 million or something like that. But they had the market cap of like Snapchat. It was like 20 billion or some crazy. I didn't even look at all of the measurables. But okay, so on the daily, we're finding some support on the 50 MA. 50 MA usually sends us back to the 20 MA if we get that bounce. So if you're going to take some options, this isn't a bad place to take some options. It does. I mean, we did lose our trend line back here, we retested it. So if I was going to trade some options, I'd probably cut them if we break below 158. Probably I wouldn't even wait. If we just close below this on a daily, I would just cut the trade completely. But I would take some long options, some calls, maybe for 185, 184 in the next 3-4 weeks, probably. Yeah, let's take a look at yours. What do you think about Beyond?
Oh, Beyond Meat. Let's see. Beyond.
I am excited. Arnold Schwarzenegger is going to do a movie on vegetarians and bodybuilding.
Really?
Mm-hmm. Looks pretty
wild. Cool. So let's see. Beyond, just from
they can get a partnership with Arnold. I'd send him up.
That would definitely move the market for sure. All right, so traditionals are very different. 236 and 382 pullbacks on traditionals are healthy. Deeper into the 618, 786 is a little too much for traditional markets. So we could see we got a reaction at the 382, and we dropped down. We did fail over the 20. We did come back. We did flip the 20. So we broke it, closed below. We came back, retested it, failed, pushed back down. Same thing, tried one more time, failed again, found support on the 50, push all the way back up. Right. So now we're just kind of hugging this 50, just like Jacob said. We did get a close above it, only just barely, not much trading going on last Friday. So very little movement here. It was up, $250 on $166 asset. So nothing really to write home about. The important thing to notice here is that you do have 1, 2, 3 candles all kind of gravitating towards this same zone, and you're right in between fibs, right? 382 and the 5. So as far as support's concerned, your only support is that 50, and the 50 is pretty new. So I would expect to see same thing. I mean, I'm looking for upwards up to the 20 to get back into that, 184, 183 zone. I don't expect to see all too much resistance at the 382, which is going to sit at 169. So I would imagine we push up. We got to get over the 7 and the 9, get back to the 20. And from there, I'd imagine we drop back to the 382 and actually solidify that level as support. Structure-wise, we could see like the same area where we're accumulating just below. We had that same zone. We had 1, 2, 3, 4, 5, 6, 7 days where we hung out at the 382. We did close above it, but we didn't push above it. So we kind of danced around it for a little bit, and that's when we were hovered all over that 9 EMA. So I'd imagine, again, we push up, we hit the 20, we come back down, solidify 382 as an actual support, and then next stop would be 236 and back up to all-time highs, double top. So, of course, this is going to have to play out with the rest of the market. It did have earnings. I think it was probably right here. I think the earnings was the big drop. So if we actually go to the daily, you'll see the disaster of traditionals and, the non-beautification of a 24-hour market. And so then you can start getting into the gap theory, and you can start saying, all right, well, We got to fill these gaps over here. And so we can see right at the 20 would be one small gap that you would want to fill. And that'd be this area right here. So if that was the case, then, come back up to the 20, you have a little bit of confluence now, taking that same options trade, get a call for it. And again, same thing, a break below the 50. And I'm right away looking for, 145 ballpark right into this support level over here, this triple candle. So I'd be like right in that ballpark over here. And that would be a short play, but down to 149 with 145 is kind of like a safety net. I think would be a safe play.
Did you play any options on Beyond? I didn't touch it, man. The price was fucking wild for me.
I unfortunately called them correctly, but I didn't take them. So it was just too risky. It's just too new. And it was just too risky of a play, but I did think we were going to break major to the downside, and we did. So, I mean, at least it was right. We had the major open here, but it seemed fake, right? So when we pushed up, I was like, that's not going to last. And it didn't. It came all the way back down, which was great. And then 2 days later, we dropped again.
To me, it just reminded me of Tilray. So someone was asking, JT was asking specifically about OBV. So I can show you OBV, and I'll give you a little bit of a kind of theory behind it, what people looking for. So OBV is interesting. It stands for on balance volume. I'll make this a little bit darker. The values are actually very irrelevant for on balance volume. It's fairly static. These are cumulative measurements. What it measures is it measures volume flow, and it measures volume flow as compared to price. The formula, I can't remember the exact formula off the top of my head, but it's it basically measures volume flow. The theory behind it is basically they're looking for divergences in price and the volume flow. So if price is, let's say, flat, or if price is going down slightly, but OBV is ticking up, that usually means it's a retail contrarian indicator, meaning that if price is going down and volume's going up, that means that retail is actually selling and the institution is actually buying, because the volume flow is increasing as the price is moving to the downside, and vice versa. If price is going up and the volume flow is accelerating to the downside, that usually means the institution / smart money is selling while retail is buying. So they're buying the tops. Retail is basically dumping their bags on the retail. And then, so OBV is a really, really good indicator to track institutionals. So if we look at BTC USD, the OBV has been very, very helpful in kind of leading the market as far as like divergences. So back here, we can see we broke price. Now this was actually really, really interesting because this candle here, when it first broke, very, very few people predicted it to go that deep that quickly. And so we saw for the first time ever, HODL wallets start to really sell their Bitcoin. So some of the on-chain analytics stuff, the HODL wallets moved record number of volume on this move down. So I think some of the people that have been holding Bitcoin for 3 to 6 years, they started panic selling at this level. But so the OBV, as you can see, we saw the price heading down here, and we saw the price heading down here, but we saw a little bit of divergence in that OBV. It started moving to the upside. OBV has been a lot more helpful on the 4 hour. Whoops, where'd that go? The 4 hour than the daily, just because you can really see the fluctuations on OBV as price moves. So, all right, let's get a good glimpse here. Not much correlation back there. What you're looking for divergences. But yeah, that's the basis of the OBV though, is it usually tracks smart money. These are pretty straight correlated. Let's see. Where are we at in the price section? Price goes down, 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 down. So that's fairly correlated. This. So price is going down, but it's still relatively flat on the OBV. And this is Bitstamp. It might look a little bit different on like BitMEX or something like that, but yeah, that's the basis of the OBV. And just like the RSI, you can use the OBV for patterns, for double tops, resistance levels. It works very, very similar in that sense. Okay, so here's a good example. So price was here, flat, but the OBV started rising. So that would be considered a divergence into smart money. We've also got kind of a support line here. It's a good leading indicator, though, just in general. It usually kind of precedes our price action. Hopefully I explained it well enough. I don't have all the definitions right in front of me or the formulas, but yeah. Do you use the OBV at all?
I do. From time to time, I got a whole bunch of templates, and one of them that tracks all volume. OBV is on there pretty significantly. I use it in Forex as well for Confluence. I want to know that there's actual volume behind the position that you're taking, or at least the trend that you're trying to jump in on.
Now Dusk is interesting. It's pulled back to the 618. The problem is a lot of these trades have been going to the 786 or just doing full retraces. You can see spike. It kind of held the 618, but then it dumped right down to the full retrace here. We had a nice spike. This actually was a nice pullback zone here, but I think that was only the 50 fib. Yeah, just 50%. But right now we're looking at this did a complete spike pullback, and Dusk is also another relatively new coin, and we weren't able to make a higher high, even though we pulled like 17% from that trade. It is selling off now, and we kind of broke that trend, as I alluded to this morning on the live market updates on Discord. And OBV is showing we're heading to the downside. Not much divergence yet. So that was Dusk. What are some other trades that I was looking at? Anything you're specific watching for yourself to trade?
I mean, I've had my eye on the money guys, the volume movers. So EOS, Knowles, ICX, One, Matic, Neo, Algo,
So
Onkar.
Similar, yeah.
Basically the any Binance coin that gets a volume push of 3%. Currently, in this month, and the first week and second week of September that's what I'm going to keep my eye on, because those will be the ones, I think, at least the ones that aren't going to get carried over into U.S. markets, meaning that they don't trade on Huobi US or Bittrex or
right.
Coinbase.
That's what I'm looking for too. Is at least some liquidity elsewhere, and we're still kind of debating internally. Where the biggest thing is like when they shut down, we got to see where the money goes. My bet is on KuCoin, but the big problem with KuCoin is they don't have TradingView integration. Which is really annoying.
KuCoin is probably the most similar to Binance in the regards that it's kind of a fun exchange. It's a young exchange. People like to do contests, and you could just picture like, I don't know, people wearing like hoodies, for like KuCoin.
KuCoin's interesting because for a long time, every coin that got listed on there basically just died.
Right. Well, I think was it KuCoin or was it Kraken that took Balina as their like?
That was KuCoin.
It was, right?
Yeah.
KuCoin's interesting. KuCoin's one of the few exchanges that's US friendly in the idea of KYC.
Yeah, they don't have KYC. They don't allow US users, but you can withdraw up to 2 Bitcoin
right
a day if you don't do the KYC. So looking at Algo here, this is one trade that I do like just because of the way that it was setting up. But you can see we had this bullish divergence on the OBV. So again, that shows smart money's accumulating. Volume dies, so you get this divergence. which also correlated to a 786. Again, I was watching this trade, but we dipped and then spiked hard, and then here we dipped and closed below, and then they just moved super quick out of these zones. And it's usually they move when like Bitcoin's gonna do something a little spicy. So I don't like to take too big of positions if we're in other positions. But okay, so Algo tested the 786, bounced, got rejected at the 236 as well as the 4 hour. So if we're looking for pullbacks, possibly let's see if any reactions. Possibly that 200 MA could be a decent pullback there. So a little bit further down, which would also correlate to that 50% fib. So we're getting close to a potential algo pullback for a deeper run. If this is a wave 1, this could be a wave 2, and then hopefully we've got a big wave 3 in it. But this could also be like a little bit of a pennant on the OBV. Algo, we looked at Algo, we looked at Dusk, we looked at Ren, COS. Let's see. See there, FET. I posted a reversal on FET earlier. We'll do a couple more charts, and then we'll look at a few other things, and then we'll close it down. And hopefully you guys enjoyed this. We'll try and do some daily ones where we'll go over specific trades that we're looking at, and then we'll if you guys want to do more, if you guys have specific questions, we can definitely do more. Okay, so FET, we had this, OBV is pretty flat actually, but all of the other stuff was showing a bit of bullish divergence. Someone said they're taking a lot of notes. Absolutely, man.
That's awesome. Yeah, man. Ask your questions. It's all good.
Yeah, especially if you've been through the 21-day trader challenge. If you've been through the 21-day trader challenge, a lot of these concepts are probably, getting repeated. And so if you have specific questions on that stuff, let me know, and I'll go over them a little bit more. Okay, so FET, we're in this massive falling wedge, but we have an exaggerated bullish divergence right here. See that exaggerated bullish divergence? So that's what I was looking at. FET, it just looked on the 4 hour, it just looked super strong. We got a little bit of reaction, like 13% from when I posted it. But again, we may come down, retest this 590 level. But I would look for some sort of a retest on the top of this wedge channel here. But if you can get an entry, like maybe they'll put in a stop down to like 560, 570. Wait for that wick to come and then get an entry. Yeah, not a bad play though from an RR's perspective. Can we get the resistance points and such added to the margin channels with updates, mainly Bitcoin? Edmund? So the one thing about that is it has been confusing. I have been getting private messages for a lot of the amateur traders, people that have never traded margin before. If I issue a short signal, a lot of people just kind of have no clue, what that means, what's going on. So I may just introduce a margin only product that's kind of separate from this. The design of this was mostly a long only strategy. The problem is in a downtrending market like this with altcoins, it makes it a lot tougher because then you have to trade reversals, and reversals, as Chinga said, have a very low hit rate. But the point on reversals is having like a 30% win ratio, but your wins are 60 to 100%, and your losses are 5 to 7%. So you can take 3 out of 10 wins and still be very profitable. I prefer continuation trades or breakout pullback trades, but even our breakout pullback trades, the pullbacks, they just do 100% retraces. So our setups are valid, but Bitcoin just the dominance just keeps kind of ruining a lot of these alt setups, unfortunately. So even though your TA can be good, the market conditions can still kick you in the teeth a little bit. Okay, so RVN, does RVN have any life in it? So I'll look at RVN and then I'll flip it over to Chinggis and see what he's got. Let's look at low time frames. Let me take a look here at low time Looks like we've got a little bit of an uptrend on the 5-minute. Let's go down to the 5-minute auto. I'm loving the trader versus trader stream format. Yeah, I wanted to bring him on just so that you guys could get multiple perspectives. He's much more of a price action trader. I love my price action, but I'm an indicator / moving average kind of guy. I like Confluence with that stuff. Examples of hidden divs. Yeah, we can go over hidden divs. Okay, so Raven, we had a little mini uptrend on the 5-minute, but we broke that uptrend. Now, a lot of these moving averages will act as resistance. That's the 5-minute. 15-minute, not much there. Let's see if we've pulling back. We did tap the 618. Let's look at the hourly. Yeah, so we were forming a pretty nice triangle here. It looked like it wanted to rip to the upside, but this 200 EMA on the hourly just kind of rejected it multiple times. So we did pull back, tagged the 618. This would be the second tap of that demand zone. The RSI did break 40 and is having a struggle to break above 70 on the hourly. So still looks bearish. The daily, we lost bullishness back here. So I would say once we broke 60 right here, so we lost the 382. So once we broke 1100, 1200, that bullish trend was over for the intermediate term. And from a high time frame, we got no support on what I thought would be nice support here. So we may see this thing come all the way back down to 270 sats. Little tiny bullish divergence here on the daily. Slightly, but yeah, let me send it over to you and let's see what you've got here. I'm not seeing much that interests me. I'd probably be a little bit more of interested when we get back above 380, I think is my level. Once we get back above 380, I'll kind of reevaluate that trend there.
Yeah, Raven's interesting. So Raven on BTC, there's not much for me until we bottom back out again. We lost every level on the way down. 618.
It's not sexy.
No, it's really, I mean, it was a perfect 786 reversal long for 2 days.
Yeah.
And then, and that was it. We came back down almost a double bottom on the 786, which is interesting. You would have liked to see it come down and find support somewhere around the 70 or just push higher. But instead it came back down, which ended up creating this area that gave us this big, huge, falling wedge, which was not good. After we did that, we pushed back up. We lost that level. We came back down 706. We only just barely hung out for just a few days. And then we dropped it 786 the second time around. We had one candle reaction. And then that was it. It was a quick dump right to the 886. 886, the first push up to the 78 was a fail, a drop back down low. So you have equilibrium between above 88 and below 88. So when you get into the 886 zone, you're out of levels. So you have to start like getting, historical on what levels make sense here. So you look for equilibrium, which is unusual, but it's something to at least look at. Because right out here, you're in space, right? There's nothing going on. 886 to 1, there's no levels. So the push up gave you this percentage point up here. You got just about the same percentage point down below, which told you that this level was at least interesting for now, but it was indecision. It's basically the equivalent of like a weekly spinning top. You had a push to the upside, a push to the downside, but for the most part, the trading stayed within the middle. Another push to the up, which was your double top. So this is your double top and then your preceding drop, right? So on this drop, you got a lower low, right? And now you've since broken out of the wedge, but I think we can clearly call this.
It looks like if you take that price bar and kind of zoom it out again, just like you had it. Yeah. It also looks like that wick down on the 8th to the left. Whoop, to the left.
Yep. To the left, to the left. This
Yeah,
guy?
right there, right there. That's
Okay.
now acting as resistance. That's that support bounce.
Yeah.
It looks like
yeah.
it looks like we're now testing that on the price action as a horizontal.
Yep.
Whoops, just on the candle closing.
Yeah, for sure. You got confluence with the lower EM for the faster EMAs 7 and 9 pushing. So, as far as MAs are concerned, right, moving averages, it's below everything, right? So it's clearly in a downtrend. There's not too much to say except the double top and with the drop. Next level for me, is 269. We're right at that. It would be a triple bottom. So you would basically have, listing your first major area of support before, your swing low that turned essentially your trend that formed your all-time high, and basically come all the way back down and retest that level one more time. This is setting itself up for a pretty nice ABCD. If you're to look at from the top of trend to the big impulse down to the, quick, short-lived uptrend, and then back down again. So 1.4, you'd be looking at like a 1.6, should be pretty typical. So let's say just below the 1, and that probably coincides with that wick down there. It's a little bit lower than that wick. So again, when you start getting into price discovery on either the upside or the downside, sure, most traders will start looking at Fibonacci extensions. You start looking at, harmonic patterns, anything that can give you a leading indication of future price based off of historical data is what you have to start looking at, because you're out of options, right? After your all-time low, it's, to zero. That's why this level over here, the 127 level, this would be an area of interest if we start gaining, momentum down that way, if we don't see any kind of recovery. I would expect the way it reacted to the 786, I would expect a similar reaction on the 1, right? This would be
a nice strong bounce. I'm looking.
Yeah.
I'm eyeing that level for a nice entry, and I want to see some like bullish divergence as we get to that price zone. So 270. This
is a very easy to set up trade, very easy to set your stop loss, very easy to get some good targeted quick gains and some longer term gains. So you could do a nice quick slap up to the 20 and get the hell out of the trade, or you could do a nice quick 50, or you could push it all the way up to the 786. You can get your local down right here. You get from top to bottom. If this becomes your bottom, get the 2-3 on the way back up. You all know that, your 1 would be your drop line. So whatever percentage you wanted to go below that would be your stop. It's a very easy setup, but you have to get there first. The problem with traders, and I have the same problem, is patience, right? Like, this is a daily chart. This could take 5 days, 6 days, 7 days before it comes down here. It could happen tonight.
So Chris Wright was asking for hidden divs. Yeah, so that 270 zone, definitely one to watch for sure. And it looks like we're about to tick up on the MACD there.
We are 1, 2, 3, 4 days ticking up on the MACD. So hidden divs are continuation divs. It's a divergence, but it's a continuation of trend.
Yep, so I got a really, really, really good example here.
Oh yeah, do it.
Yep, I'm gonna remove all these moving averages, and I want to show you what this means. So the difference between a classic bearish div is when price goes up, but divergence, but the oscillator. Sorry, when the price goes, so bullish div. Let me do bullish div first. Let me look at the daily. So a bullish div is where price goes down like this. So this was a div that we called. This was a trade that we made. We bought around 3,300. So the price goes down, but the oscillator goes up. That is a classic bullish div. Because what this is showing is that price is going down, but momentum is shifting to the upside. So that usually indicates a reversal is coming, potentially. Now, the opposite is where price goes up, but the oscillator makes a lower low. And that indicates that the corrective pullback is over. And there's a lot of logic into it, but that's essentially a hidden divergence where price makes a higher low. But here's a hidden bullish divergence right here, actually. So price makes a higher low, but the oscillator makes a lower low. Is that a lower low? Flat, kind of a lower low. Basically like double bottom. But that's a classic hidden bullish divergence. Again, we saw price make a higher low, vroom, vroom, and then we saw the indicator here make a lower low. So again, that's a hidden bullish divergence. So there's a lot of these, but it's basically where the indicator makes a lower low and the price makes a higher low. That's an indication of a trend continuation. Okay. So also what we can see on the weekly is we've got a very, very obvious lower low on the indicator, but we've got a higher low on price. So that higher low on price is showing a very, very classic bullish divergence hidden for continuation to the upside. The question that we have now is, are we going to get a pullback retest of this 10,003, 10,500 zone to form an ascending triangle before it breaks out and continues to the upside? Or are we going to just break this horizontal support for a downside move, or are we just going to break up here? So those are the questions that we don't have all the answers to, and that's where you just need data to form better setups. And then JT Doorknob, he said, I see a Bitcoin 28 Bitcoin buy wall on QKC. I often hear that buy walls are bearish. They typically are bearish. Yes, that's very true. It usually means that somebody is propping up price to exit a position. Those are usually spoof orders, meaning they don't have any intention of buying 28 Bitcoin. They're just trying to hold the market up to exit a position of some kind. And that's kind of how do you think of it from an institutional perspective. Okay, guys. So what did we want to close with? Chinggis, did you want to go over anything specifically? Did you want to go over Bitcoin dominance, maybe altcoin dominance, and then go from there?
Yeah, I think we can close it out with sort of dominance and kind of what we might be expecting in the week to come. You know, what we might be looking at, or at least if the next 7 days pans out one way or the other, we can kind of at least get an idea on the major levels that are important.
Okay, I'm gonna have you show your screen first here.
Okay. So dominance, it's one of those things that you hear all the time, but very rarely does it ever get dissected to the point where it probably should be. This is essentially the lifeblood, the ticking heart of all of crypto. This is not just, you know, Bitcoin or Raven or Ren or Matic. You know, this is crypto right here. This is it. Bitcoin dominance. Now I use a different chart. You can for sure use the TradingView one. That's let's see, that's this one right here. So you have market cap, BTC dominance, but you'll notice the levels are different, right? This is at 69, and then the others. I used a one off of the chart CoinTrader Pro 1. That's that Trade Signals guy. But the difference is this includes indexes on all indexes on CoinMarketCap. So it actually has all of the data. TradingView, if you'll notice, like you can't trade anything on like KuCoin or like, I think Kraken, or I don't know. There's X amount of indexes that aren't on TradingView, so they don't have that data. So this one, although the numbers are similar, they are a little bit different. We're at 68.6. and we're pushing up. The important thing to look at here is the historical drop levels which is what we were getting into. So on the big drop down, this is 6K, right? We're all very familiar with that. November, and then the big drop and the big push down. That's when dominance for that time dropped to such a significant zone. Alts, if you could see this red line here, alts had their little heyday over here. So this was, if you see Bitcoin go down, right, you start seeing altcoins popping. This is your lead indicator. This lets you know that altcoin trading is safe. Altcoin trading has been very risky, and this is the main reason why we are very much trending down. Volume on these pairs alone is only one of the major problems. The other one is that all of the volume that is coming in is going to this guy right here. It's all going to Bitcoin, which is okay if you're long Bitcoin and you're trading Bitcoin pairs that are outpacing Bitcoin, meaning that they're just performing better. Bitcoin is doing 3% and Matic is doing 10%. Then you want to be a Matic, obviously. But we've noticed a few things here, right? 1, 2, 3 with the drop and the flip. So what I mean by that is we had resistance all the way back here. Resistance, 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 resistance. We broke up, closed above, pushed, came down, found support, lost it. And then we did this classic, that U-shape that we just talked about, right? You break up, swing, and you make that little S. Right here, we flip back over again. We broke that level. So we just talked about swing fails. This was your swing fail, broke, closed up above, smashed through the level, and now we're back up above it again. This is where it starts getting a little dramatic. Now that we've seen these 2 days right here where we push back off, here's what we're looking at, or here's what I'm looking at. I'm looking at Bitcoin dominance to come back down and officially retest this level here. So it's going to change every day, right? Today it's going to be 66.3. Tomorrow it's going to head into 66.6 and so on and so forth. It's going to keep going up and up. I'd like to see this come down because here's the problem that we're seeing. We're getting into levels with alts that are really approaching, if not already, all-time lows. Like price discovery, to the point where I joke around and I'm like, yeah, I'll wait till it hits zero. Like, you might not be joking. Some of these coins may never come back to their all-time high, and I think that's pretty safe to say across the board. But that doesn't mean they don't have, a 23%, a 28%, a 38%, a 50% move back up into better price for exit purposes. So that being said, every time this comes back down, that's like 1 step forward, 2 steps back. It just gives altcoins enough breathing room to allow cushion for the next big move up, which will then give them the next big move down. If all they did was ever go down, they would be, negative. It's just the way it is. So for the week ahead, what I'm looking for is a little bit of relief for altcoins. I'm looking for Bitcoin dominance to come down, officially retest this level, get the alts up anywhere from 10 to 40%, give them the cushion that they're going to need, because if this thing does do this next and we break that level, then we're back into the 70 zone for Bitcoin dominance, and that could be a lot of trouble for alts. Getting back and recovering off of this, if this brings the bleed that people would be looking for, you're creeping back into the 80% zone Bitcoin dominance. That's literally $8 out of $10 for every single $10 bill in crypto is only in Bitcoin. We've seen volume decrease just in one exchange, just on Binance, just from an announcement. We've seen volume decrease 40, 50, 60, 75% just on some pairs where they're almost impossible to trade with any sort of sound liquidity. Imagine if, every 80 out of $100 just goes straight to Bitcoin. Where does it go to the other ones, right? You're looking at the majors, right? You only have three majors. You got Bitcoin, you have XRP, and you have Ethereum. And if you get into the situation where Bitcoin dominance rises, Bitcoin price rises, we're back into 14, we're back into 16, 16.8, we cross back over into 20. Guess what's going to be in the news every single day? It's going to be Bitcoin again. And that brings in new investors and that brings in new people. And when they have $500 and they throw it in the market, they're going to throw it into Bitcoin. That's the only thing they've ever heard of. That and probably Libra. We're not talking about that. So the thing is here, you need to be somewhat prepared mentally for what does this mean as a trader? How can you use this to the best of your advantage? And what I'm looking for in the next 7 days is some relief. And by relief, I mean the trades are going to be risky, but I think that's going to be, I would never call it an alt season. We'd have to break below this level and really, really start tanking on dominance to get an alt season. But to get a few days, where we could see, 10 to 60% gains in some of these coins, that's well worth it. And I think that'll give them the cushion that they need so that they could suffer another 50, 60, 70% drawdown if and when Bitcoin dominance does rise to these ridiculous levels. And that'll at least put us in position where we could be more into Bitcoin, ride the Bitcoin wave, get into the trades that are outperforming Bitcoin on those days, in those hours, keep the longs long, keep the stops tight, and look for pullbacks and re-entries in order to accumulate more and push back up. Ride the wave up, right? You don't want to fight it, you just ride it. But just be aware that, any altcoin trade while this is trending up is hyper risky. That's why the shorter term plays, the ones that may be over within a few hours are pretty safety. You have a little safety net windows to get in there and get a nice push up. Again, this is daily, so a lot happens inside of 24 hours where you can get a couple of sweet solid trades, ranging anywhere from 3 to 10% all the way up to 17, 25%, and that's well worth it. Well worth it. So that's what I got for dominance as far as what we could be seeing in the next week coming up. Be interesting.
I'm seeing very similar price action. I mean, basically we've got 4 or 5 days to trade some alts. So I'm looking for some playbacks on some plays on high volume coins. Dusk was one, Matic was one, but we got stopped out before the 55% price move, which is annoying because then they don't give you another entry when it comes back. But yeah, so hopefully you guys found this helpful. We're gonna do this weekly closing for all members, but we will start doing a little bit more short term daily closings. Probably an hour, half hour, hour long, depending on how many people are watching or what you guys want. But hop in Discord. Let me know what you guys want to see on these. Let me know if there's a good specific thing you guys want us to cover. We will have some educational webinars coming up as well, specifically on different topics as it relates to risk management, psychology, protecting capital, stuff like that. And thanks for watching, and we'll see you guys in Discord.
Night, everybody.
Well, someone said, "Do you have time to do S&P?" Yeah, I'll do one. I'll do it real quick, and then we'll head out after that. So we'll just take a look at the SPY. Well, it's Sunday, so not much action has changed over the last 3 days. But what I was pointing out to Tone was that was a pretty solid bullish reversal candle. I like to see that. I'd like to see how tomorrow opens. If we open up, it'll looks like we'll probably challenge and push all-time highs yet again. This candle right here was, I believe, a 200-day moving average on the weekly. Hold on, let me take a look. Yeah, hit the 200 MA on the weekly. So very strong recovery. That was the buying point from a volume perspective. We saw institutions come in. We've seen that hold us up all the way back to 2011. Um, and this comes all the way down to here and 20% down. And yeah, so S&P looks pretty decent. That was a good reversal candle. Lots of buyers stepped in right here. 50 MA kind of held us up once, twice, three times. And so, yeah, I think that we may challenge all-time highs, but it really depends on what the hell's going on with Trump, Trump and his China antics, this trade war. Now, one thing that I do see is we do have 1, 2, 3 rejections off this level. So this could have been a bull trap up here. I don't see anything that really gives me any reason to play this as a trade. Maybe, it was a good reversal candle, but it looks like it is actually finding a little rejection here. So maybe some puts on the SPY for the 280 level and maybe lower, but
I could see it down at 267.
All the way down to 267. Let me see.
It would
like a 618 pullback.
Yeah, I mean, it would be dramatic. It'd be a 382 on the larger scale, but
260 is the 618, but 267 is exactly the 50% fib from what I'm seeing.
Yeah, this is for let's see, if you were to, let's see what I do. So this is on.
Yeah, I gotta share your screen.
Yeah, let's see. Let me throw the weekly on to see where the actual drop is. So chart's a little messy, but it is what it is. So on the larger scale, so this is on the weekly side. So the drop down, your 1 point is down 67. So this would be your next major drop. This was your double top. This goes all the way back to 2008. That's your crash. That whole rise up is just what we're still seeing now. That's that bull trend, the 10-year plus bull trend that we've been in. And top side is what we would be looking at. So if we took this whole thing and said, all right, if we were able to push up on our high, which we got right here over at something, if I could find it properly, here we go. Then we'd have our 382 would make sense right here at 267. So that's an artificial fib. This is what I talk about with price discovery, laying fibs on before price gets there, and that would be this 2618. So this chart is not really for public dissection. It's more for my brain to theorize. But we're talking about SPY, and this is my SPY chart. So if 2618, which would be my level, so 391 all-time high, we get that before the next crash, that would be ideal. That's what I'm looking at. That would bring that level 267 down to what would be a 382. So I'm cool with 382. I can visualize this trade before it ever happens. So this is where I'm long to until crash, and that's just kind of how traditional markets work, right? It's just like any other cycle. A crash is coming. When, I don't know, it could be in 10 more years. But I kind of have it right here. So on my chart, it happens on May 25th. But the idea is, looking at the structure, we had just about a double top. We didn't really get much of a drop. So we ended up using our high, we'll call this another high, right? And another high. So we still have a trend, although it's really ugly. The deep pullback is about the only thing we got going for continuation for now, with local drops, which is what I would expect. So if we do get a drop down, like this is the 50 right here that we just took support on. I'm just double check, but yeah, okay. So that's the 50, and we're on the weekly chart. So that's pretty good. It didn't quite hit it, but that is support, and we closed that week out. Even though it doesn't look great, like Jacob said, I mean, it is bullish, so it's a bullish reversal candle. This is a hammer, so a hammer pattern. It's basically showing that there was an attempt to the downside. It all got bought back up. price was happier above it, and now the price is happier above it, you expect further upside. Trend on the weekly would put us just above it, which means we did close above it. So we should continue this trend up for now. If we're to lose it, then I think we're coming down to this level here. Although it's an arbitrary blind level, I think, in my opinion, it makes sense if we look at structure and we look at this level here. We got 1, 2, 3, 4, 5 weeks all danced around this one zone. You want to come back, you want to get some buys in. I would imagine that the buying is going to be happening in this level here. Not a whole lot happened here. This is straight uptrend. Push back down to these levels here, but that was a false break pretty quick. Everything sold, got bought up real quick, and then smaller candles. So this is like there's less interest in this trend. So if you notice, like these candles are a lot bigger. This is weekly buying, weekly buying, a little bit of dump, no, a little pullback, no big deal. But then the next leg of that trend, it's all weak. And these are tiny candles. Not a whole lot of activity over here. There's a lot more over here. So that would be the argument for a close below and a quick drop, is that this trend is weakening. It's exhausting. It's also this median line of the larger channel, which again, not for public dissection, but you probably can't even see it. There is a channel in here somewhere, and this yellow line is your heart line, right? So that's your center line on the channel. Channels typically have, an upper and a lower. And you could dance back and forth between them for quite some time. But the only thing that stays consistent with the two is that heart line ends up getting tested as resistance if you're in the lower half, and support if you're in the upper half. That's fairly consistent through the life of the channel, regardless of breakouts. Even like false breaks, come back down, you still retest that channel. False breaks to the downside, come back up, still retest that channel. And we're right on that channel now. It's been resistance ever since we broke below it, which is right here. So all the way back in October, it was resistance for 1, 2, 3, 4, 5, 6, 7 weeks. Huge drop. Came back up for the next test. 1, 2, 3, 4 weeks, 5 weeks in a row. We failed. Came back down for another push down. Came back up again. 1, 2, 3, 4, 5 weeks again, and another drop down. So these levels are more important than people think. Although it looks like a mess, this level is important. A break above this heart line would then start showing this activity up here, in my opinion. And we haven't been up in that upper band since October. So it's been quite a long time since we've been on the upper half of this channel. So it'll be interesting to see where this thing ends up going. But, again, a lot has to do with China, the trade war, Trump, what he says. He's in the news now for Epstein stuff. So it's like, it's one thing after another. The traditional market moves with news. It's similar to crypto, in early 2017, a lot less so now with news with crypto, but it still moves in traditional markets. They eat that news up, and people react, and they will panic sell, and the drop of a dime. It's a little bit of information comes out, and bang, you'll see selling like you've never seen before.
I think this week will probably be one of the most interesting weeks in the markets that we've had in a long time, just with all of the craziness that's going on with the yuan currency.
Yeah.
But yeah, yep. That was almost 3 hours, guys. 20 of you guys, 20 to 30 of you guys stayed on that whole time. This will be available for recording. And again, we're going to try to do these every Sunday for you guys. 7:30 p.m. we'll start. I'll probably have to get my daughter to sleep during the middle of it. But, we'll be doing these every Sunday, and we're going to start trying to knock these out on the dailies, at least, through the week. But, mostly on the weekends might be a little iffy depending on availability, but we're going to try and do as many of these as we can to give you guys just kind of live access to get all your questions answered. All right, guys, again, see you in Discord. Make sure you tag me with any questions, and then we'll go from there, and see you guys soon.
All right. Take it easy, everybody.